Netflix expects to sign up 2.5 million new customers in the third quarter. Wall Street expected twice as many. Dan Morgan covers the company for Synovus Trust.
Maybe they're just trying to lower the expectations on the street. We know that Netflix stock has made a huge run, trading at 80 times fiscal year 2020 estimates. It was priced to perfection, right? There was just no room here. So I'm wondering if management is just being cautious, like they were saying earlier, about the consumer is eventually maybe going to pull back a little bit.
In April, Netflix warned growth would slow, but investors were hoping they'd be pleasantly surprised. Shares have been bid to record highs, pushing the market value of Netflix past the likes of Walt Disney.
And futures this morning are higher, with S&P futures up 8 points, Dow futures up 31, NASDAQ futures up 96, 10-year Treasury up 4/32, yield 0.60%, and the yield on the 2-year 0.13%. Straight ahead, we have the latest world and national news, and this is Bloomberg.
All right, thank you, Karen. It's 6:07 on Wall Street. Now let's bring in Michael Barr for a check of what else is going on around the world. Michael?
Thank you very much, Nathan. New York City is on track for a Phase 4 opening by Monday. Governor Andrew Cuomo says he will make a decision whether it will happen by 4 p.m. today. Cuomo remains fearful of what the pandemic is doing to America as hospital ICU beds in numerous states hit max capacity with patients suffering from COVID-19.
We're trying to impose a quarantine, but I'm very afraid of an increase in the infection rate because of what's happening in the other states, and that's why I want the federal government to wake up and do their job.
Cuomo also says New York City bars and restaurants will be subject to tougher penalties for violations because of a lack of compliance. Governor Cuomo said surging demand for diagnostic tests across the country is making it harder for people to get timely results. He says in New York, close to 70% of COVID-19 tests are being processed by a network of more than 200 local labs that don't take as long. New Jersey Governor Phil Murphy reminded everyone to self-quarantine for 14 days and get tested if they visited coronavirus hotspots as the number of cases in his state begins to slowly creep back up. Murphy also says school districts in New Jersey are still finalizing their plans for the next school year.
While districts across the state are working hard to ensure a safe, underline safe, return for their students this fall, we are also aware that for some students, remote learning will remain a part of their experience.
Another 32 people died in New Jersey, with the death toll at almost 13,700. Georgia Governor Brian Kemp sued the mayor of Atlanta to stop her from enforcing a city mandate that people wear masks in public, given a spike in coronavirus infections. Kemp, a Republican, said in a statement that he filed the lawsuit to force Democratic Mayor Keisha Lance Bottoms to comply with his executive order blocking Atlanta and at least 14 other local governments. New York officials say one worker is dead and at least 3 people are injured after scaffolding collapsed at a building in Manhattan yesterday afternoon. Authorities say it appeared workers were doing facade restoration on the roof of the 11-story building at the time of the collapse on East 36th Street. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
Okay, Michael, thanks. It's 6:09 on Wall Street, and time for the Burden Accountants and Advisors Sports Report. Good morning, John Stashower.
All right, good morning, Nathan. We're just 6 days away from the Yankees season opener against the Nationals, and yet it is not known where the game will be played. It's supposed to be in D.C., but the city may enforce quarantine regulations for anyone who may have been exposed to the virus. The game could be moved to Fredericksburg, Virginia, where the Nats have a minor league team, or even to their spring training facility in West Palm Beach, Florida. The Mets open up a week from tonight at Citi Field, and Jacob deGrom is confident he'll pitch. The Mets ace experienced tightness in his back on Tuesday.
What was weird is it was just out of the blue, so I think I must have slept wrong, or, because like I said, when I threw Sunday, I felt like I could have pitched. The day I threw my bullpen, I felt like I could have pitched and felt completely fine. So this was nothing like one pitch. It just was something that didn't loosen up.
If deGrom can't go the opener, the Mets would use Marcus Stroman. There'll be some noise at these games that don't have fans. Fake crowd noise will be piped in from an MLB video game. There'll be a public address announcer and the usual walk-up music before every at-bat. NBA may do some of the same things. Eric Bledsoe, starting guard for the NBA-leading Milwaukee Bucks, tested positive, so he's not with the team in Orlando. And New Orleans rookie sensation Zion Williamson left Orlando due to a family medical emergency, so He will have to quarantine upon his return. It was one thing to have the PGA Tour return, but yesterday may be a bigger deal, the return of Tiger Woods at the Memorial in Ohio. His first round since February, a 1 under par 71. Tiger trails Tony Finau by 5 shots. Second round today. Tiger tees off at 8:17 this morning. John Stashower, Bloomberg Sports. Nathan?
All right, John, thanks. Now, how do you put together a big sports tournament in the middle of a pandemic? We'll ask the co-founder of the Premier Lacrosse League, Paul Raybill, on the Bloomberg Business of Sports show. You can catch that conversation tonight at 7 and tomorrow at 11 a.m. on Bloomberg Radio, or subscribe to Bloomberg Business of Sports wherever you get your podcasts. You're listening to Bloomberg Daybreak.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seizechange.
The following is a message from PGIM.
Welcome to Outsea in 60, Perspectives from PGIM Thought Leaders. Here's Mark Baribeau, the head of global equity at Jennison Associates.
You're looking at bigger implications of technology playing a role in keeping us all connected, giving us access to information or goods very quickly. So we don't see any of those trends changing. In fact, they're likely to accelerate. There's some new things that have come along, though, that people might find useful, like telemedicine. There were skeptics about that, and I think the more people using it, especially the more doctors are using it today, the more they're liking it. You can see more patients. It can be more effective. It might actually be a better solution.
Hear more PGIM perspectives at pgim.com. That's pgim.com. Partner with PGIM, the investment management business of Prudential. These statements are not intended to be investment advice and should not be used as the basis for any investment decision.
How do we control coronavirus now? This is Scott. He's a nurse.
NHS Test and Trace helps stop the spread of the virus in our communities. If you've got symptoms, even mild ones, get a test immediately. Don't leave home for any other reason. If you test positive, we can trace the people you've been in contact with and contain the virus. So get tested and protect each other.
To get a test, go to nhs.uk/coronavirus or call 119. Stay alert. Control the virus. Save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Friday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
Ever wondered how people's postcode lottery works? Easy. Your postcode is your ticket. And every weekday it gives you the chance to win £1,000 or £30,000 every weekend. And every month players in your postcode could win a share of £3 million. Join in at postcodelottery.co.uk/radio before midnight on the 23rd of July to play in the August draws. PPL manage lotteries on behalf of good causes. 16 plus. Conditions apply. Play responsibly.
Here's Sherry Ann.
Peru is actually the world's #2 miner of copper, and it's now working its way back from a 2-month shutdown because of the coronavirus. The CEO of Miner Buenaventura and head of the local Institute of Mining Engineers says the country's mines should be back to full production by the end of July. Victor Gobitz also gave his outlook for metals prices, starting with gold.
We have a very good perspective for gold this year because we expect that the entire world will face this uncertainty And definitely gold is safe haven in this respect.
Do you expect it to stay at that $1,800 per ounce level that it's at right now?
Yes, we expect at least during this 2020 year. Yeah, definitely, because when you see all the information, the vaccine is not coming yet, probably in 2021.
What about copper prices, the highest in 2 years right now? What's your price outlook?
Yeah, in general, in the long term, from the long-term perspective, we are very, very optimistic regarding the copper price. But in the short term, definitely there is a significant impact related to Chile.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and we have earnings crossing the Bloomberg from BlackRock. It's reporting second quarter long-term inflows that missed analyst estimates. Revenue beat. Right now, futures are higher with S&P futures up 8.5 points. Dow futures up 32. NASDAQ futures up 96. The DAX in Germany is up 0.33%. 10-year Treasury up 5/32. The yield 0.59%. The yield on the 2-year 0.13%. NYMEX crude oil is down 0.9% or 38 cents at $40.38 a barrel. COMEX gold is up 0.2% or $3.60 at $18.03.90 an ounce. The euro 1.1413 against the dollar. British pound 1.2547 and the yen 107.17. Today we're also looking for reports on housing starts and building permits out at 8:30 Wall Street time. Consumer sentiment is out at 10. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, the U.S. has shattered its single-day record for coronavirus infections, registering more than 70,000 cases. More states are rolling back reopening measures. Georgia Governor Brian Kemp sued the mayor of Atlanta to stop her from enforcing a city mandate that people wear masks in public, given a spike in coronavirus infections. Big donors from Hollywood and the technology sector poured money into Joe Biden's coffers in the second quarter, while President Trump saw a major drop in support from people writing big checks, according to new financial filings. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Nathan.
All right, Michael, thanks. It's 6:19 on Wall Street, live from the Bloomberg Interactive Brokers Studios. This is Bloomberg Daybreak. We continue to watch shares of Netflix in the pre-market this morning. They're down more than 7%, adding to losses after the company released second quarter earnings that showed it actually added more than 10 million new subscribers, with so many people stuck at home during the pandemic. But the outlook shows the company does not expect that kind of growth to last. Dan Ives is with us now, Managing Director for Equity Research at Wedbush Securities. Good to have you with us this morning, Dan. Thanks for being here. You know, Netflix tried to manage expectations in the second quarter. So should investors be punishing the company this time around?
Yeah, and it's great to be here. I mean, this stock's just had a parabolic run with the rest of tech, right, up more than 60%. You know, I mean, just to put some numbers in perspective, they added as many subs in the first 2 quarters as they basically did all last year. And I think this is a trend you're going to see throughout tech earnings season, is that you'll see some of the knee-jerk reactions that could be negative. But in my opinion, the path for tech is still higher. We think up another 20 or 30% over the next call 12 to 18 months.
Well, what gives you that positive outlook here? Is it just that the tech sector stands to benefit from people continuing to work in a stay-at-home economy?
Yeah, I mean, first off, we'll call it on a work from home. On the consumer side, of course, there's streaming. But then on the enterprise side, you look at a lot of areas like cloud, names like Microsoft reporting next week, and even cybersecurity. In tech, there's a lack of secular growers in the market. And that's why you're going to continue to see these tech stocks get re-rated, moving higher. And I think it's led by the FANG names. And in our opinion, FANG are going to lead the market, you know, through this earnings season. I still view it as a leg higher, even though you'll see some of these knee-jerk reactions. Right now, the streaming market is a bonanza of growth. There is competition, Peacock, HBO, and others coming in. But right now, all chasing Netflix.
I want to ask you a little bit more about the potential impact of that growing competition from the likes of HBO Max and now Peacock, as you mentioned. Does that have the potential of eroding Netflix's position as a first mover?
Well, I think the big worry continues to be Disney, because content, the C word, that's the key. It's all about content right now, especially as content's not really being generated. And there's a battle royale for content. You're going to continue to see the sort of bidding war happen. And I think that's the general worry of investors in the streaming space. But we still believe that the average consumer household could add 1 to 2 more subscribers sort of growth, in terms of services to their typical household. So I still think, some strong days ahead for streaming.
Is there a possibility of Netflix putting its subscription fee on the table, perhaps raising that to be more competitive?
Well, if you look, that's always been the big question. And, of course, look at Disney in terms of their pricing that's really undercut Netflix. I think right now, especially in this backdrop, you're going to see prices where they are. But it all comes down to content, and that's why right now you definitely saw, in terms of this pandemic, just a massive pull forward across the board for subscriber growth. But in what's going to be a work-from-home environment for at least the next 12 to 18 months, both on the consumer side as well as on the enterprise side, this trend is going to continue to work, in my opinion, in terms of the stocks. And that's why I think tech stocks continue to move higher going forward. With, I think, 2Q earnings season in general, it's going to be a shrug-the-shoulders type quarter for many on the street.
And in terms of content being a focal point, you got to think Netflix has that in mind, sending a signal by boosting its chief content officer, Ted Sarandos, to the co-CEO position. How could that affect Netflix's prospects going forward?
Yeah, he's obviously been an integral part of the Netflix story last 20 years. If you think right now, it's all about content, and no different than what we're seeing at some of these other streaming competitors. And I think this is something where the success, not just of a Netflix, but for any other competitor, even including an Apple, which is aggressively going after content, it's all going to be generated from the carrot and the stick with content and subscriber growth. And right now, at least for the next, 12 to 18 months, you are going to see just some white-hot growth in streaming because of this dynamic and the cord-cutting phenomenon.
All right, Dan, always good having you on to get your insights on the tech sector. Really appreciate it. Hope you have a great weekend as well. Dan Ives, Managing Director of Equity Research at Wedbush Securities, with us this morning. And as we look at futures markets, tech names are leading the gains. Green on the screen with NASDAQ futures higher by 1%, up 104 points right now. Dow futures are up 72 points. S&P futures higher by 13. The 10-year up as well. 5:30 seconds, the yield 0.60% on a 10-year Treasury note. The 2-year yield is at 0.14%, and the euro right now is at 1.1413 against the dollar. Stay with us. You're listening to Bloomberg Daybreak.
This is a Bloomberg Money Minute. The CDC has extended its no-sail order for cruise ships through the end of September, preventing vessels from sailing in U.S. waters out of concern over the COVID-19 pandemic. The extension is the second for an order that dates back to March 14th. The latest was set to expire on July 24th. But the move probably won't dramatically change the timeline for the biggest cruise lines. Last month, an industry group said it would suspend voyages from U.S. ports until September 15th. Shares of Netflix are moving lower in pre-market trading. The company added lots of new subscribers amid the coronavirus pandemic, but its forecast for future user growth fell way short of estimates. Meanwhile, CEO Reed Hastings made a management change, elevating Chief Content Officer Ted Sarandos to a co-CEO role. Stock futures are higher ahead of the opening bell after a lower close for Wall Street yesterday. The broader market lost 0.4%. Gina Cervetti, Bloomberg Radio.
I've always wanted to learn another language, but every time I try, it never sticks. So I decided to give Babbel a try, and I really like the teaching method of the app. I started with the beginner lesson on Babbel, and it starts with simple words and phrases, and soon you're putting those words into a conversation. Each lesson takes about 10 to 15 minutes, and they're all really different, which keeps things interesting. The app is really smart. It actually keeps track of the words I'm struggling with so I can practice them and get better. I chose Babbel because it was created by real language teachers. They built it around real life, how people actually communicate, and what they care about. I can't wait to use my new language skills in the real world. Dos cervezas, por favor.
With Babbel, get conversational in Spanish, French, German, and more. It just takes 10 to 15 minutes a day. Now try Babbel free. Just go to Babbel.com and start learning a new language today. That's Babbel.com. Babbel.com.
Hey, y'all. How do we control coronavirus now? Listen to Steph. She's a bus driver.
Now that people are using public transport again, we really need to make sure that we keep each other safe. Passengers need to stay 2 meters apart. If that's not possible, make it at least 1 meter. I want to see everyone wearing face coverings over their mouth and nose unless you've got a good reason not to. And when you get to where you're going, you need to wash your hands. We've still got to play our part.
Stay alert. Control the virus. Save lives.
Decisions. Clearing. Isn't it great? So much choice. But hey, listening to me on your desktop isn't getting anything done. You need to take this Friday morning by the scruff of the neck. Ignore this gloomy weather and carve your path to success, which begins just down the road in Southampton at Solent University. After 3 years here, you don't just get a degree. You get a ton of support, real-world experience and connections, and interview fuel. That's why we're in the top 25 for student satisfaction in the Complete University Guide. At Solent University, we're ready for the future. Apply now at solent.ac.uk/clearing.
And action.
I was offered one.
Cut. That's not on the script.
I was offered one. Get in.
Ladies and gentlemen, I was offered one.
Come, boy. I was offered one.
Don't take our word for it. 9 out of 10 people said they were offered a great value deal with O2. Get yours today, in-store, online, or by phone.
I was offered one too. O2 Retail Exit Survey 309 of 348 agreed with the statement. O2 offered me a great value deal. For full verification, see o2.co.uk/terms.
When you don't collect Nectar points while shopping for your picnic, it can feel like you're missing something. Like your picnic is missing the P. It's like Icnic. And you're in the local Ark looking for the perfect spot to put your Icnic blanket and enjoying a glass of Prosecco while eating some margarita pizza. Make the most of your picnic. Don't miss out on a little extra with Nectar. Collect points on your shopping every day. Find our latest offers on the app.
Getting in the car on a cold winter's morning, you don't even want to touch the steering wheel. And by the time the car's heated up, you're already at your destination. At Honda, we listened to the chattering of teeth, and we made an app for the new Honda E, so you can control your car remotely, warming it up while you eat your toast and checking its charge while finishing your coffee. The new Honda E. Honda, the power of dreams.
At Ring, we've reinvented the doorbell. So no matter where you are or what time of day, you can watch over your home and the things you care about. Ring Video Doorbell streams HD video and two-way talk straight to your phone, so you can speak to whoever's at your door from anywhere.
Delivery.
Oh, great. Can you leave it round the back, please?
Sure, no problem.
And it's so simple, you can install it yourself in minutes. See, hear and speak to whoever's at your door from wherever you are with Ring Video Doorbell. Available at ring.com and selected retailers.
Casting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
And it's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We are just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. U.S. futures are higher as we head into the final trading day of the week. And as the U.S. shatters its single-day record for coronavirus infections, the country registered more than 70,000 cases. That is states like Washington and Pennsylvania rolling back reopening measures. Dr. Anthony Fauci says it's time for other states to follow suit.
We really got to almost regroup, call a timeout, not necessarily lock down again, but say we've got to do this in a more measured way. We've got to get our arms around this, and we've got to get this controlled.
Florida is reporting another day of record fatalities. That has Miami Mayor Francis Suarez considering another lockdown.
There is no federal safety net like there was, and there's very little, if any, of federal and state guidance on how and what metric we need to use to close. So we're developing that all on our own, and we're faced with making these tough decisions in the next few days if things don't improve radically.
Texas finds itself in a similar situation, reporting its worst day for deaths and the third straight day with infections topping 10,000.
Turning away from the virus now, the Trump administration is starting a new line of attack on China. Attorney General William Barr is taking aim at the country's relationship with big tech.
Corporations such as Google, Microsoft, Yahoo, and Apple have shown themselves all too willing to collaborate with the CCP.
Attorney General Barr says those companies and Disney have become pawns of the Chinese Communist Party.
Netflix was not on the receiving end of that criticism, but its shares are still under heavy fire. The stock is down almost 7% in early trading after a disappointing subscriber forecast. Bloomberg's Charlie Pellet has more.
The world's largest paid streaming service says it expects to sign up 2.5 million new subscribers this period, compared with the more than 5 million expected on Wall Street after 2 quarters of torrid pandemic-fueled customer growth. Netflix signed up 10.1 million new paid customers in the second period, beating Wall Street's average estimate of 8.27 million. Charlie Pellet, Bloomberg Daybreak.
All right, Charlie, thanks. And BlackRock is out with earnings this morning. The firm saw investors jump back into mutual funds and ETFs in the second quarter, rebounding from outflows earlier this year. BlackRock says net inflows to long-term investment products totaled $62 billion in the second quarter.
S&P futures are up 14 points this morning. Dow futures up 79. NASDAQ futures up 104. The DAX in Germany's up 0.6%. And the 10-year Treasury up 4/32. The yield 0.60%. Yield on the 2-year 0.14%. Straight ahead, we have the latest world and national news, and this is Bloomberg.
Thanks, Karen. It's 6:33 on Wall Street, and Michael Barr is here with more on what's going on.
Netflix's moat, and really says that it's Netflix's fight to lose when you look at the competitive landscape. Is that a view you'd share as well?
I do, and for a couple of reasons. Number one, they have first mover advantage, and number two, they have brand recognition. When you think about streaming, it's almost you should think Netflix, and everybody else, including the Walt Disney Company, is playing a game of catch up. So they really have a first mover advantage there. And the second thing is they have the resources, financial resources, to get the best programming, both original programming as well as some licensed programming. So I think they're in a good position, remain in a very good position. And again, the most important aspect they have in terms of their moat, as Tara pointed out, is they have almost 200 million subscribers on a global basis, paying to anywhere from $10 to $13 per month. That's a pretty good moat.
Yeah. Also, we learned Ted Sarandos will become co-CEO. Netflix, of course, says they've just made formal what was already informal for several years. But will this change anything at all for investors?
I don't think so. Ted Sarandos is really well regarded by Wall Street. The reality is he is the one that's been responsible since day one for acquiring the programming, whether they're buying programming from HBO or Warner Brothers or NBC. And then more recently, over the last 4 or 5 years, he's been responsible for the original programming. And I think most people feel like Netflix has been one of the most successful programming ventures in the history of programming. So he gets a lot of credit for all the stuff we see on Netflix. And he's probably the most popular man in Hollywood now because he has the biggest checkbook, and he's been willing to open it up and pay for talent and pay for content.
Terrific brief. Paul Sweeney, thank you so much. Rumor has it after this arduous task so early in the morning, Mr. Sweeney will darken the door for Bloomberg surveillance later this morning. And Michael Nathanson scheduled to be with us as well, Moffett Nathanson. Right now, let us get to our first word news in New York. Here's Ritika Gupta.
Thanks, Tom. Anthony Fauci is optimistic there could be a new treatment for the coronavirus by fall. The infectious diseases chief spoke to Facebook CEO Mark Zuckerberg in a live event. Fauci says he expects results for a clinical trial on monoclonal antibodies in the next few months. That underscores the speed at which the government has been working to quickly approve and roll out a treatment. India has become the third country to record at least 1 million coronavirus cases. The virus curve that didn't flatten despite imposing an expansive lockdown in March. Only the US and Brazil have had more cases. India's population is more than double those two combined. This suggests the virus has more room to run. Former Trump communications chief Anthony Scaramucci wants to see the president humiliated in November. The founder of Skybridge Capital says President Trump is, quote, obviously incompetent. He is now seeking Republican votes for Joe Biden. Scaramucci lasted only 11 days in the communications job before he was fired. The president called him a highly unstable nut job. Two more airlines are saying goodbye to the first jumbo jet. British Airways is retiring its fleet of 31 747s immediately. The planes were supposed to stay in service till 2024, but that was brought forward because of the pandemic. In Australia, the last Qantas 747 made a farewell tour over Canberra, Brisbane and Sydney. The 747 entered service in 1970. The four-engine plane is much more inefficient than newer two-engine models. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom, Naira.
Ritika, thanks so much. On the pandemic, and it is a dynamic story, we will speak with Andrew Pekos here of Johns Hopkins University. Please stay with us. This is Bloomberg.
Opportunity knocks at the door. Don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Time and time again, the oldest, most successful political partnership in the world, and we certainly don't want to see it broken up. Anyway, Paris, thank you very much for your contribution. Thank you to everybody who's joined us today. Thank you particular to Dido from NHS.
The Prime Minister of the United Kingdom in a spirited press conference managing his message forward on a Friday in the summer with what we see globally, there's no surprising that you really wonder if we'll get some of this treatment from the President of the United States here on into this Friday. To give us perspective on the dynamics here of cases and deaths and where we are and you are, we're thrilled to be briefed this morning by Andrew Pekos. He's at Johns Hopkins University and has been of huge value. Andrew, what's the sweat level of pros? I get the media play. I get the energy I just saw from the esteemed politician of the United Kingdom. What's the sweat level, the nervousness among grizzled pros like yourself?
Well, being prepared for this pandemic, having seen the first large number of cases that came into the country, we should have been better prepared to deal with the eventual surges and small outbreaks that are occurring now. It's incredibly disconcerting to see the level of cases that are coming up in places, and more importantly, the lack of real responses to get those case numbers down. This is not the way you deal with a pandemic, and we've been prepared not only from our own experiences, but from the experiences of other countries. We know how to intervene here to get these case numbers down. There seems to just be a lack of either political will or personal will to implement those tools.
Okay, I'll go with the personal will, and we've seen some good articles this week showing percentage of mask wearing in societies and all that. What are we going to see in the next week or two? I was ripped up on Twitter, Dr. Pekos, looking at the death dynamics, the first and second derivative of the log path of deaths. Help me here with the death dynamics lagging the case dynamics right now.
Yeah, so we know because of the course of the disease, we'll see case numbers increase first. We'll see hospitalizations lag that by anywhere between 7 to 10 days. And then we'll see deaths lag that by another 7 days or so. What's interesting about now is the initial cases are in a younger population. So those surges are really coming up in terms of those what we call healthier individuals who may not be suffering as much death. But what we're going to see is now the transmission of virus from those individuals to more susceptible individuals. And that's going to mean that the hospitalization and the death rates are going to increase on an even further delay. So we are expecting to see these surges in severe cases lag even further than we have in the first wave in the country. And by the time we see that surge, it's going to be almost too late to intervene because of that delay in terms of monitoring cases.
Yeah, that would certainly be a very serious situation. But Dr. Pekos, in terms of the severity of cases, is it really true that cases are less severe for young people? Because you see a lot of anecdotal evidence, particularly on social media, of people talking about really frightening symptoms that recur for weeks, if not months on end.
Yeah, and this is the important thing to understand about things like when people use things like case fatality rates or hospitalization rates. It may be that if you're younger, the percentage of individuals that suffer those severe cases is lower across the population. But we have to remember that virtually the entire U.S. population is susceptible to diseases. So even to this disease. So even a small percentage of severe cases amplified by the entire population of the U.S. turns into a large number of cases. And that's the important part that people have to remember. It's not just about, well, most young individuals won't suffer severe cases. There's enough of these young individuals so that the number of severe cases is really going to be large. And on top of that, they are efficient transmitters of the disease. So you'll see the severe disease in other populations that we know suffer from severe disease. So this is not a benign disease. This is not a common cold-like virus. The severity of disease is covered with the large numbers of susceptible people is going to translate into a large number of severe cases that we're going to see.
Right, and on the transmission, of course, the WHO is still looking into whether there's airborne transmission of COVID-19. But what about the immune response? What more do we know about whether people can build up sufficient immunity to this as we wait for a vaccine?
Yeah, so with the vaccine trials, we've had some good results, still preliminary results, still results off small population sizes, but it seems like many of the vaccines that have been fast-tracked are generating the immune response that we want to see, that we assume will protect us from infection. We still have a lot of safety work to do with these vaccines, and that's going to come in play when we get the larger trials coming in place now into the early fall. In terms of the immune responses to infection, it's kind of a mixed bag. So in the same way that this virus causes a wide spectrum of disease ranging from no symptoms to hospitalization and death, we're seeing that the virus also induces a wide spectrum of immune responses, from rather modest ones that fade relatively quickly to rather strong ones that can last for at least a few months, because that's so much of the data that we have. So it's, again, a big heterogeneous spectrum in terms of the immune responses that are induced by infection. The vaccines seem a little bit more tighter in terms of their immune response, so that's a good sign.
Yeah. Our thanks to you, Dr. Andrew Pekosh of Johns Hopkins. Great to have you with us today. And be sure to check out VR US Go on the Bloomberg for the latest information, and tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Coming up, Michael Mayo, Wells Fargo head of US large cap bank research. That's at 8:30 a.m. in New York and 1:30 p.m. in London. An interview not to be missed in a week where the Nasdaq has been underperforming the S&P 500. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
I'm Naira Chahich in London. Tom Keene is in New York. Now, Morgan Stanley CEO James Gorman told Bloomberg the bank had a strong corporate strategy growing into the coronavirus pandemic, but the economic outlook remains uncertain.
What we designed was a business that in times of severe stress would be fine, and when markets are very active and volatile, we would still perform very well across the whole investment banking franchise. This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based, and that's what we are.
James, there's been a strong argument over the last week. We've heard from several CEOs of Wall Street institutions on this program that we haven't fully realized the risks around this recession, that fiscal policy has made it more difficult to assess creditworthiness, and there's going to be more pain in the months ahead. James, would you characterize things a little bit differently?
Well, for the economy, it's very hard to tell. I mean, it depends on, how quickly the COVID outbreak that we're seeing across the South and Southwest subsides, how well people coming back to their place of work functions, continued liquidity and stability in the market. So it's too early to tell, but, we're not a credit-centric institution, so for us, it's less relevant. But for the marketplace, until people get back to work, you're going to have consumer credit problems. There's no question about that.
James, even corporate America is starting to face bankruptcies at a much faster pace here. We saw Goldman Sachs take an impairment tied to Hertz yesterday, and that's just one bankruptcy. How does the industry start to get ahead of the bankruptcies here?
Well, I don't know that you can get ahead of it. I mean, it's a natural consequence. Small and big businesses struggling when, they haven't got clients coming in. I mean, look at the restaurants, look at all the small businesses, the hairdressers and the doctors and the dentists, and before you even get to big companies. So, that's part of why we saw such a massive wave of financing in the last quarter, as a lot of companies got ahead of that and built up stronger balance sheets in anticipation of these tougher times.
I want to talk a little more about the small customer here, given that the E-Trade deal is close to closing here. Yes. Retail traders are front and center in this market and buying Tesla at 340 times earnings. Are they flirting with danger? Is this the top of the market here?
Well, if you can tell me when the top of the market is, I'd be in a different business. So, no, the market reflects, future expectations on earnings, and that's what we have. Retail investors have clearly been more active. We've seen a lot of new investors coming into this market, as we saw whenever there's a period when the market's on fire, which it has been the last couple of months. But no, I mean, Tesla should be valued based upon what Tesla's been able to do, and they've created an extraordinary company. So I don't connect those two things.
James, I don't expect to get a price target from you on Tesla anytime soon. I will ask you this, though. Wall Street has seen huge amounts of success in the last couple of months, and it's a question I get asked a lot, so let me ask it of you. What's the best way of explaining that, James, in a moment like this? How Wall Street has done so well in the last couple of months when the economy and the labor market is still pretty much on its knees?
Well, I guess I'm not sure I'd describe it as huge success, Jonathan. I think we and maybe one other bank are the only banks to beat their cost of capital. They've had huge revenues in trading revenues across the street, but they've had huge credit provisions. And what the banking industry has done has been to support corporations that needed support during this crisis. That provided the financing that let those companies stay stable and position themselves for future growth. So in absolute terms, the profitability of Wall Street is actually dramatically down. We have a different business model. That's why we performed the way we did this quarter. But I think if you look at the banking sector, the hits that they're taking, consumer credit, small business credit, corporate credit, the bankruptcies that Sonali was just talking about. So no, I don't think there's a disconnect. I think the banking sector reflects what's going on in the economy.
Morgan Stanley CEO James Gorman. Sonali Basak, Bloomberg Wall Street correspondent, joins us now. Sonali, great to have you with us and great work on the interview. Look, Morgan Stanley wrapped up a week of wins for Wall Street trading desks. Can we expect that to continue in the third quarter?
That's a very simple no here. All of the big bank CEOs have told you that the levels will normalize, but the levels will still be better than we've seen last year. And so it's going to be a market share race. We can expect them to lean a lot on their traders because the other businesses may still have a harder time.
What about loan loss provisions? What was the comparison between the different banks in terms of how big a hit they had to take on those?
JP Morgan took a massive hit. It took a $10.5 billion hit. That was bigger than analysts expected. Bank of America around $5 billion, slightly lower than what analysts expected. The good news here is most of the banks think that the worst of the provisioning is over, but then come the charge-offs, then come the delinquencies. It's going to be a very slow bleed for these banks, watching this this economy really slowly recover. But we also don't know for sure that those losses are over. And if the economy does get in worse shape, then we may see more of them.
Yeah, and what else did we learn about the outlook for the economy, in particular on delinquencies and also unemployment?
One of the important things that James Gorman had said to us was that bankruptcies are very much expected to continue. We've seen bankruptcies rise at the fastest rate, of course, since the last financial crisis. This is companies of all different sizes, big, small, everything in between. And even the companies that are not going bankrupt are cutting jobs at a very significant rate, which will slow down consumer spending quite a bit as people start to save for a rainy day. You know, we have UBS earnings next week. They have already said in a survey earlier this week that even the wealthiest clients are starting to be worried that they don't have enough liquidity on hand for another rainy day. And so should we see a second wave of this pandemic, people are going to get very afraid to spend money, and then some of the gains that you're seeing in the markets here might be very pressured if even the most confident clients are starting to give up.
Shonali Basak, Bloomberg Wall Street correspondent, thank you so much. And U.S. futures printing positive, S&P E-minis and NASDAQ futures pointing to a higher open. We're also seeing European equities turn into the green ahead of a crucial summit to decide on a €750 billion stimulus fund. Coming up, join Tom Keene, Jonathan Ferro and Lisa Abramovitz for more Bloomberg Surveillance, simulcasted on Bloomberg Radio and TV. This is Bloomberg.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
unemployment is going up, and for those that are in work, there will be that fear of the specter of unemployment coming down the tracks.
These companies are now starting to hunker down for a longer, more protracted recovery. So they have to right-size their businesses.
A lot of businesses are not buying into the V. They see a different destination regardless of the journey.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance with Equity Futures Positive. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Tom Keene, one thing matters going into the weekend and coming out of it: fiscal.
You know what's so important, John, for the American audience, not only framing up fiscal in Washington and the president talking about a payroll tax cut, but in Europe, this is a decisive weekend. The message started in the middle of May, the hope and prayers of the German and French leadership. And John, the key question here is, why should Americans care about it? Because it will redound right back if it fails this weekend.
Lisa, what is failure this weekend? What is success? Will they kick the can European style, or will we finally see some progress coming out of the weekend?
Meanwhile, we've got Netherlands' Mark Rutte coming out and saying that there's less than a 50% chance that there will be a deal agreed upon by the end of this weekend. That's something that we are watching. Also, we're watching 8:30 a.m. U.S. housing starts and building permits. Tom was talking about this earlier this morning. We've got mortgage rates under 3% at record lows. He's thinking about moving out of the all-cash fund. 12:30 p.m., former Fed chairs Janet Yellen as well as Ben Bernanke testifying in front of Congress following their signing a letter alongside 128 other economists urging more fiscal support, sort of piggybacking on what a lot of people are saying. And then tomorrow, that meeting in Brussels wraps up. I want to point out, it is believed to be the biggest meeting of world leaders since the pandemic started, and they're taking measures such as special levers to allow leaders to open bathroom doors with their elbows to avoid getting the virus, John.
Why don't they just use their feet? Why get special levers for their elbows? Why don't they just use their feet to open the door? Just get a swing door and kick it.
The burning question of
Tom
the Brussels
Keene,
meeting.
why does Europe always make it so difficult? Isn't that the story going into the weekend? Why does it have to be so hard?
This is really important. Let's rip up the script here, John, if we can. The Prime Minister of the United Kingdom, we watched carefully in the last hour, and he is vamping this, John, exactly like the President of the United States. The politicians are literally making it up as they go, hour by hour, day by day.
Well, let's talk about the last hour. The Prime Minister coming out with the following headline, aiming to allow larger sports gatherings in October. Tom Keene, not a medical expert, a journalist. Here's the question I would ask the Prime Minister. Why October? Going into the winter flu season, would you want to allow for larger gatherings of sporting events? That would be my first question. Show me the science. Show me the medical reasons that you would go forward with that.
Our James Wilcock was brilliant out at Queen Victoria Street, folks. He noticed the lack of science experts advising the Prime Minister in this press conference. And, John, that is exactly like the uproar of Navarro and Fauci at the White House.
Everybody says they're following the science, except everybody seems to have a different interpretation of what their science actually is. Tom, in the market right now, futures up. We're up 14 on the S&P 500. We advanced 0.4%. The burning question going into fiscal negotiations in the United States, to what degree is this recovery already stalling? Let's bring in Dan Alpert, shall we? Westwood Capital Managing Partner. Dan, can you help us answer that question, please?
Well, you know, this is the point at which we risk morphing from a health crisis and business recession to a full-on financial crisis and perhaps a depression. The problem is there were three things that the CARES package that Congress passed last time tried to do. One was provide relief to households, which I think worked out quite well. The next thing was to maintain some semblance of aggregate demand in the economy. And as I walk up and down the streets of Manhattan, I see lots of people at restaurants eating outside. And many of them probably lost their jobs and are getting $600 a week in income supplement from the federal government. So that worked. But the last part was stabilizing businesses so that they would be around to reemploy people when this crisis was over. And on that side, we really come up against the wall. The PPP money that was sent out there has basically been spent, and we are still seeing incredibly high volumes of layoffs from businesses large and small. One of the problems with the PPP money is that it only covered 8 weeks of payroll. And so what we saw in terms of a decline in unemployment during that period was largely fueled by that PPP money. Much of it much of it went to employees who were not actually called back to work.
Dan, we're going to get to the age of oversupply in a minute, and I can fold this into the European stimulus debate, but let's stay on American jobs right now. Chapter 13 of your classic, The Age of Oversupply, Good Debt, Bad Debt, Dealing with Deficits. Dan Alpert, you never envisioned a deficit of $4 trillion. Are Republicans right that we have an oversupply of deficit?
You can't have an oversupply of deficit until you actually see some semblance of inflation. We have now been in a 12-year cycle, if you don't even look at the low inflation during the 2000s, a 12-year cycle of basic disinflation across the goods sector. The only thing that's kept inflation high in this country has been housing, a little bit of medical, a little bit of education. At the end of the day, that's shot now. And we are going to see, oncoming deflation to a very, very large degree over many years. In that environment, there's absolutely no risk of having the federal government spend money.
Dan, let's go there. What kind of fiscal stimulus is required at a time when nearly 50 million people have filed for unemployment benefits since the start of this pandemic?
Well, there's two things. One is, what do you do about maintaining households? What do you do with the $600 a week federal unemployment insurance supplement? I think there's been some really good proposal out there in terms of lowering that number across time as the unemployment rate comes down. I think if you target that $600 against declining unemployment rates, there's some that trigger at 5%, some that trigger at higher numbers, but at the end of the day, it's fairly easy to map an exit from that supplement against the unemployment rate. But the bigger concern that I have, and the thing that really, really is what I've been writing about for the last several weeks, is where are these employers going to end up at the end of this crisis? Just because they can stay alive for 8 weeks doesn't mean that they can survive out there in the ocean floating around when that relief is gone. And that relief right now is gone. And I believe we're going to continue to see high levels of initial unemployment claims, many of them coming from employees who were laid off at the beginning, re-payrolled, and then dismissed again.
Dan, because of the importance of the EU meetings, I've got to go to the fiscal amount. I know John really wants to focus on this, folks, through surveillance, and he's correct about that. You write about the empty toolbox in the age of oversupply. The toolbox has a can in it that they keep kicking down the road. What is the risk to European leaders? What is the risk for America, for that matter, if the EU once again kicks a can down the road?
Well, the EU is in a different position. The countries of the EU and the countries of the Eurozone don't have a sovereign currency of their own. They don't have the ability to control the exchange value of that currency independently, and therefore their equation is very different. Europe desperately needs to federalize. This is the point of no return for Europe, in my opinion. They're going to continue to face the same global challenges that they have for many years, from both the Americas and from China. Their economy can't survive at this point and can't recover, especially in the southern countries, from this crisis without really an ongoing pattern, not a one-time, fixes-all kind of solution of federalization, so that they actually begin to support each other.
Dan, do you consider federalizing a process or a destination?
Well, right up until now, it's been a destination. It's about time they get started with the process. The problem with all of this is, there's been a lot of talk about issuing COVID bonds that would be equally backed across the union. But as a practical matter, the amounts involved are very small, and it wouldn't be done on a sustained basis. So this is something that needs to be not only re-examined and re-talked about, but actually done.
Dan, this is the key question heading into this weekend. How likely is it that we're going to get a deal? This is what John and Tom were talking about. At a time when the euro is the strongest versus the dollar since March 9th, what is the risk that this could all get unwound if the dissonance, if the disagreement is deeper than people expect?
Well, it can be. One of the concerns I have about the strong euro, it's not something that doesn't have impacts elsewhere. Obviously, the weak euro has been enormously beneficial to countries like Germany in terms of their exports, and has made them very, very competitive. I don't believe that Europe can survive as an economy much above a 115 against the dollar. I think you're going to see, you're already seeing shipments out of China surge. China has not enjoyed the increase in consumer spending that it would have hoped for after they reopened, and yet their production is through the roof. And so those goods have to go somewhere at some price. And so the fact is that Europe, the Americas, and every place else is going to be under a great deal of pressure from Chinese exports. Europe itself has to be price competitive, and I don't believe it can be price competitive with a strong euro.
Hey, Dan, always great to catch up with you, sir. Come back soon. Dan Alpert there of Westwood Capital. Euro dollar just off 115 at 114.24. Tom Keene, let's make it very, very simple. There's a pool of money. At some point, some of that's going to be loans, some of it will be grants. And Mark Rutte of the Netherlands, the new Wolfgang Schäuble, so to speak, at these kind of events, he wants a lot of strings attached to that money as it's distributed.
Well, they're meeting in the Schuman building in Brussels. And John, this really goes back to the arch debates coming out of Jean Monnet and Mr. Schuman a long, long time ago. Nothing's changed in 50 years, 5-0. They really, on a financial basis, don't trust each other. And to Mr. Alpert's comment, how do you get to federalism?
And this is the problem, Lisa, going into the weekend when many people here stateside just lining up over the last couple of weeks on programs like this to say overweight European equities relative to the United States.
It makes sense from the economic standpoint, and that's what everyone is saying. And yet the Frugal Four still very much saying we need more assurance. And meanwhile, the markets, if you take a look at Italian debt yields, they're at the lowest since the pandemic started. Very clearly the message from there is they'll get it done.
Europe a little bit firmer going into this one as well. Coming up later on this program, we'll look ahead to further reopening here in New York with the state's Lieutenant Governor, Kathy Hochul. That's later this hour. From New York City this morning, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. Across the U.S., public officials are warning that they could impose lockdowns again if people don't act to halt the resurgent coronavirus. The mayors of Miami, Houston, and Los Angeles have all floated at the prospect soft persuasion isn't working to stop the record number of infections and deaths. Case numbers are climbing in all but 6 states. The White House is drawing a line in the sand for the next coronavirus aid bill. Officials say President Trump could reject a measure passed by Congress if it doesn't include a payroll tax cut. Democrats are solidly opposed, and even Republicans are cool to the idea. German Chancellor Angela Merkel is raising doubts about reaching agreement on a landmark $855 billion recovery fund this week. In Brussels, EU leaders are meeting in person for the first time in 5 months. Merkel says the differences remain very, very great. Amongst them, how will the money be distributed and rules dictating how funds will be greenlighted. In the UK, Prime Minister Boris Johnson is bracing for a second wave of coronavirus cases. He will announce more than $3.8 billion of extra funding to help prepare the National Health Service. Johnson is also due to unveil plans today to ramp up virus testing to 500,000 a day by the end of October. In China, people's reluctance to travel and eat out is dragging on the economy. According to a supplemental report on second quarter GDP, the accommodation and catering industry shrank 18% from a year ago. Some areas in China still have pandemic restrictions in place, plus tourism has shrunk as people avoid public places. And 2 more airlines are saying goodbye to the first jumbo jet. British Airways is retiring its fleet of 31 747s immediately. The planes were supposed to stay in service till 2024, but that was brought forward because of the pandemic. In Australia, the last Qantas 747 made a farewell tour over Canberra, Brisbane and Sydney. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
aggressive intervention. So I am supportive of government acting in an era of a crisis, but I think we should make no bones about it, that these types of interventions are not dealing ultimately with the pandemic.
The Nissan Ariya is the one that represents for the Nissan new chapter. I would say that the Nissan has a great experience because we have 10 years of the history through the Nissan Leaf. We have learned a lot of the voice from the customer.
We can't go home without it. And so because of the unemployment insurance expiring and the rest of that, we have to have the legislation. It's been 2 months. It's been 2 months. More people have died, more people have gone unemployed, and more people have been infected.
House Speaker Nancy Pelosi there speaking to Bloomberg in the last 24 hours on the next steps for fiscal policy. I have to say she was sounding a little bit more optimistic about coming to an agreement with the Republican Party, Tom Keene, but it speaks to the dysfunction worldwide at the moment on getting things done. Why wait so long for the next move?
Exactly. Right where I want to go, John. Let's get right to it, folks. This is a packed hour of Bloomberg Surveillance. Kevin Cirilli with us. Kevin, McSally, Gardner, Collins, Daines, Tillis. You've got an updated list of that. And these are senators of the Republican persuasion at risk. Can you explain to me, Kevin, why any Democrats or any Republicans can't get this thing done fast for the benefit of all?
Well, it's the folks on the far left and the far right, to be quite frank with you. You know, they're from the conservative perspective, they're representing districts where it's a very tough sell in parts of their state where the virus has not infiltrated as much to argue that additional funds are needed. However, I think that with the reclosing of several states, that sort of muted the issue. And I agree with Jonathan in the sense that Speaker Pelosi, in speaking with David Weston yesterday, did sound much more optimistic about the timetable. Yesterday, I also spoke with Governor Gretchen Whitmer. She's a Democrat governor of Michigan, a key state, not just in 2020, but for the conversations that we're having on trade and, of course, on stimulus. And she agreed. She actually praised Governor Larry Hogan and said that she's working with him to try to make sure that the states get more financial aid in the next round of stimulus as well.
Kevin, Nancy Pelosi may sound optimistic, but so is the market. And the market is basically pricing in that Congress will pass some sort of extension to this enhanced unemployment benefit, which is being doled out to more than 30 million Americans. We're running out of time, 2 weeks left. Who are the key constituents within Congress that need to be swayed to get this through?
It's from this perspective, it's actually more nuanced, and it's an incredibly great question, because as states like Arizona and California have shut down, and you now have, there are conservative representatives in states like California and obviously in states like Arizona. If the math on this, if those conservatives get on board with extending the benefits because their constituents need it, then it's very likely that this will get over the finish line. But for the whips in the House and in the Senate on both sides of the aisle, they're working literally around the clock, because it's not just as simple anymore as saying, okay, I'm a conservative, I disagree with sending federal aid and not having an incentive to get back to work, because some of those conservative districts, their constituents are unable to go to work.
Kevin, we've heard from the administration they would like a payroll tax cut. Can you speak to any division within the administration on what either side of the White House would actually quite like to see?
Well, you know, so President Trump has been saying that the payroll tax cut is something that he wants, and that it's a red line of sorts for him, and that's what he needs. But then when you go a little bit deeper and you talk to his chief of staff, Mark Meadows, or you talk to some other conservatives within his administration, I guess to some, you know, Mark Meadows, I think, has emerged as the voice on this, but or even some of his now outside advisors like Mick Mulvaney, I think they would be a little bit more skeptical. But I think from a broader standpoint, it's something that the president has pushed for and really could be a campaign issue, and the crux of another round of tax cut foundation for should he win a second term.
Okay, so he wins the second term. Are we going to see more than a payroll tax this time around? I mean, we got to get elected. Everybody loves tax cuts when we got to get elected. What are we going to see here to November on tax cuts?
Well, I think that is, Tom, the main argument, and it allows for him. This is where I would put on the political reporter cap. It allows for him to bring up the tax relief bill that he had passed several years ago now, and to bring that up for a debate and a contrast against Democrats.
Payroll tax cuts are great if you've got a job, Kevin. Loads of people haven't. You know, what's the mood of Washington? Do they understand the gravity of the moment that we're approaching going into the back half of the summer?
You know, I think that from the unemployment benefits, absolutely. I think that on the payroll tax cut, I think it's a bit more open for debate. And I think to your point, to all of your points, really, I think specifically on where the unemployment benefits are headed, it has been an uncomfortable debate for Republicans to be having, not with Democrats, but with themselves, because, again, of the dynamics of their communities. But beyond that, the next round of economic stimulus, I think that the behind-the-scenes conversations are that this likely will get passed before August, and that there's another round potentially that will be needed in the fall.
Kevin, this was all meant to be a bridge to the other side, but the other side is getting further and further away as the virus counts increase to record highs. What has been the virus strategy of the White House? How has it shifted as we see the proposal of lockdowns restarting in places like Florida, Arizona, and California?
Well, let's go through the politics, the personality, and then the personality, and then the personality of what's been going on. From a political standpoint, I think that the president has had a campaign shakeup. So there's a consensus. You know, you got Stepien now leading the president's reelection effort. He's seen as a much more experienced political advisor. From a policy standpoint, you've also seen the president come out and defend Dr. Fauci despite that op-ed by Peter Navarro. But from a personality standpoint, in terms of his tone, in terms of his tone, I think that, you know, he struggled with that. And how is he going to, he's adopted both tones. He's been much more, he's worn a mask, for example, but beyond that, I think he's, you know, also been quite critical of some in the science community.
Hey, Kevin, great to catch up with you, sir. Stay well into the weekend, won't you? Busy one starts Monday. Kevin Cerulli there down in Washington, D.C. Tom, this is not a political point. It's a point about politics. This points to the best and worst of it. The idea that they don't come back to work until Monday to really get the negotiations moving. The idea that they'll be gone again in a couple of weeks' time. At a moment like this, Tom, for real, is this serious?
Well, it's typical of our four-year cycle. There's no question about that. This is really right on cue. But the magnitude of the crisis, John, is something that's new to everyone out there. And, John, I'm going to take it right over to the data off the Bloomberg terminal. The 30-year bond is really getting back to recent lows, 1.2911. And, you know, to our audience that's not as sophisticated on this, it's real simple. Lisa mentioned a mortgage under 3%. John, that's like that actuarial assumption in the United Kingdom under 4% a year ago or so.
Things have changed. They've changed quickly. In the equity market right now, we are positive 0.4%, as the team at Bloomberg News has pointed out repeatedly this morning. Not the cleanest of reads on this equity market, given what we saw in futures late yesterday off the back of Netflix. So just bear that in mind when you look at futures prices this morning. Coming up on this program, Abigail Wozniak, Federal Reserve Bank of Minneapolis Opportunity and Inclusive Growth Institute Director, senior research economist as well. Long title, interesting conversation just around the corner. This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacroix.
The last 30 years, I've managed through a number of crises myself, but nothing I've ever seen has ever been quite like the crisis we have now. I want to talk to CEOs and see how they're living through this crisis. Who is going to really manage their company in a way that people will remember it? That's what I want to know. This is Leadership Live.
Our associates have been dealing with and coping with all of that change, trying to do the best job they can of keeping each other safe and customers safe. And that's what I'm going to remember from this whole experience.
From New York City, this is Bloomberg. For our audience worldwide, we're live on Bloomberg TV and radio, wrapping up the trading week with the price action as follows in New York City. Equity futures positive 0.4%. Think of this not as an indicator of what we're about to see at the opening bell, but for the bounce back after we got smacked around yesterday evening off the back of Netflix earnings. In the FX market, a euro firmer going into this European summit. Euro dollar 114.25, up 1/3%. Treasury yields coming in around about 2 basis points to 0.6% as evidence begins to grow that this recovery is stalling and the focus shifts very much to Washington and the next fiscal move. From New York, alongside Tom Keene and Lisa Abrambitz, I'm Jonathan Ferro. Tom Keene, it is fiscal going into the weekend.
No question about that. That is a clear and present reality for all of us as we look at economics, finance, and investment. But John, as you know, we've tried to take a different tact in this pandemic to get away from the hype and get to the real-world solutions. We've hit the ball out of the park with our next guest, without question, our interview of the day for those of you coast to coast and indeed worldwide, scared stiff about the kids and education. Abigail Wozniak has an extraordinary CV out of Chicago and Harvard, her tour of duty in Notre Dame, and here she is now at Minneapolis. What you need to know is Minneapolis owns the high ground on children education in America. Professor, wonderful to have you with us. You have written on the inequalities of this virus. We are living it now in July, August, and into September with public school kids crushed by budgets, fiscal, the rest, and fancy private school kids actually maybe will be able to go back to school. That's just one inequality that we have. How do we solve this?
Right. So I think that one of the things that we really want to highlight coming out of the latest research is something that I think is going to help us think about the trade-offs of some of the policies governors are considering reimposing. And of course, any progress that we make in containing the virus is going to have serious ramifications for our children. What we want to highlight is the fact that after a few months and weeks with this virus, we've been able to understand what's happening to labor markets in places where different policies have been adopted. And a really striking finding coming out of many pieces of research, I've seen this repeatedly in very timely research seminars this early summer, is that states that have had strict and early lockdowns are seeing labor market changes that are really just as significant as states that did not lock down. So what that's telling us is that the economic impacts of the virus are happening regardless of the specific lockdown measures states put in place.
What we've witnessed here, and John Farrow, as the foreigner from England, has really noticed this, it's without question the gains of the stimulus has gone to Wall Street. We saw this with Morgan Stanley's earnings and, you know, the rest of them, Goldman Sachs and all. What is the policy prescription you would advocate so that we get a bit of equality across society right now in the crisis?
Yeah, so I think with this new information that we have that the virus contraction is hitting all states regardless of their shutdown practices, we really see that it's imperative that support continue for workers and small and medium-sized businesses. And I think some of the evidence that we're seeing on consumer finances, so from researchers who have access to, for example, bank account and credit card spending data, even for very low income households, we can sometimes see them in such data. It really does look like some of these fiscal policies have definitely made it to those households. Now, that doesn't mean that that's erased the financial hardship of the pandemic. For many households, they're treading water. For many households, they're still facing significant financial uncertainty. We see that in the data that I study that looks at food insecurity and inability to make mortgage payments on time. But it would be an overstatement to say that those stimulus and extended benefits packages that were in place under the CARES Act, it would be an overstatement to say that they haven't made it to Main Street or to many American households. What we need is to have those policies likely continue, because we are right back where we started. In fact, we're even worse off right now in terms of the virus. And so engaging in a second round of such packages, I think could help prevent an economic disaster that will follow as the virus continues to spread in the next couple of weeks.
Abigail, what you're saying is so powerful. Let me repeat it. There is no connection between labor markets and virus protection policy. What does that mean for reopening? There are some people that think we could see some divergence across states, say New York, across some of the states across the Sun Belt, for instance. Are you saying that we won't see that divergence?
We will not see nearly as much divergence as I think people expect. I think people have come to view containment policy as a trade-off, where if we engage in containment policy, we are going to lose out economically. And they're seeing them as kind of a one-to-one trade-off. And what we've come to learn is that this is much more of an investment. If you invest in containment policy now, it pays benefits in that your economy can open sooner and faster. And the reason we're not seeing as much of a connection, that one-to-one trade-off, is that people are making behavior changes on their own. That's a first reason. And so folks are just not going to go out and they're not going to spend at the same levels if they feel insecure about their family's safety and their own health. The other reason we're not seeing that divergence that we might expect is that state economies are connected to one another. So if one of them is very slowed down, it's going to affect other state economies throughout the U.S. So what we're seeing is that the labor market is not the same as the virus market.
Abigail, this is such an important point, and you say shutdown orders work. They work not only to control the virus, but for the economy. That said, if there is not some sort of lockdown, if there isn't a stricter enforcement of some of these policies to constrain the virus, is any extra stimulus throwing money, good money after bad, this idea that the bridge to the other side is becoming a bridge to nowhere?
So frankly, I share some of those concerns. I see concerns that folks have about these packages. What we also see in the data is that significant numbers of folks are very concerned about their ability to continue to stay in their housing. We know that housing disruption is significant for families that experience it, and it would be significant for our cities and communities. I think, in my view, preventing large-scale housing displacement when the next round of mortgage payments and rent payments come due is really critical. So some of this policy, I definitely agree, it's a challenge to think of exactly the right level, but we need to prevent that next wave of collapse.
Professor, one final question, unfair, but it is the heritage of the Minneapolis Fed, folks. They own pre-school education, nursery school education, and all the benefits of that. Abigail Wozniak, really simply, does distance learning work for kids? I haven't observed it. Tell me it works, please.
I'm sad to say that it does not work well, particularly for disadvantaged students. Really striking data from Brown University looking at, they actually had a study in progress, is my understanding, when the pandemic hit, tracking students' performance using one of these online math modules that I think a lot of us have probably encountered now, even though we didn't go to school with them when we were growing up. They kind of were collecting this data in the background. Pandemic hit, you can see how much learning loss has happened for students overall across the board, but most significantly for students from lower income households. So it's certainly helpful to have in place, but it's not a good substitute. It's not making up the ground. And I think we need to think really seriously about how we're going to put that back. These are, again, investments that we've foregone in the last couple of months. How are we going to make this up to our children in the coming months and years when the pandemic has passed?
Abigail, a conversation we need to continue, a really powerful conversation as well. Abigail Wozniak there of the Minneapolis Fed. Just this idea, Tom, from Abigail, that human behavior matters more than policy in a moment like this. And we're seeing that play out worldwide, not just here in the United States.
Well, I'm glad we do this once in a while, folks. We're focused on the markets. We're focused on business. And, of course, John's great interview with Mr. Gorman yesterday. But, John, I'm sorry. There are these social concepts that only can move forward on academic research. And Professor Wozniak is at the top of the research pile on this right now.
Could not agree more. And, Lisa, it's a huge, huge problem. She mentioned at the end of that interview there about the intergenerational wealth transfer that we've experienced over the last several decades. And I'm not here to throw any shade at the baby boomers, but quite clearly, Lisa, the younger are going to be disadvantaged. That's a story that we've seen over the last decade or so, again and again and again, across a range of issues. And I think, again, we're experiencing that right now.
The baby boomers, where I'm looking...
the people in the triple cash. Yeah, keep looking. Look, this is a key issue, especially because it's not only from a wealth transfer point of view, but it's also from who is losing their jobs disproportionately. And you're seeing this across a whole slew of different factors, whether it's how many people are moving back in with their parents because they don't have jobs and they can't pay the rent, versus people who can't work from home because they're more entry level, John. And I think that the implications for this are vast. What kind of policy prescription can there be, like what we've seen in the UK, to try to bring young people back into the workforce a little faster?
The political conversation is really going to ramp up off the back of this, Tom King, going into November. This is going to be a huge, huge issue. We know what the left thinks about all of this. I just wonder how the Republicans position themselves on some of these issues going into November.
You're going to see this, John, into July. I don't know if this translates to the British, John, but there's a phrase from Agnew of years ago, the silent majority. And I would predict starting pretty soon, there's going to be a lot of media coverage of the makeup, the character, and what the silent majority is believing in right now.
And the age of the average voter, Tom, that's what it comes down to again and again and again in politics. When you get to the ballot box, the age of the average voter is quite old. And when you come to some of these issues, when it is about that intergenerational wealth transfer, guess what? No one really wants to deal with it. Why? Because election risk is in front of them when they try and address it.
Intergenerational wealth transfer, John, in America is called tuition payments. Did you notice what bonds are doing, John, in the last couple of minutes?
I'm going to let that go. Should we talk about the bond market, shall we?
10s and 30s, look at it. It's amazing, the compression.
I'm just itching to come back here, but yeah, we can talk about the bond market. Going into an important weekend for Europe, and at the other side, Congress getting back to work as well on fiscal policy. Coming up on reopening New York City, Kathy Hochul, New York Lieutenant Governor. Coming up on Bloomberg Radio and Bloomberg TV, this is Bloomberg Surveillance.
With the First Word News, I'm Rishka Gupta. Anthony Fauci is optimistic there could be a new treatment for the coronavirus by fall. The infectious diseases chief spoke to Facebook CEO Mark Zuckerberg in a live interview. Fauci says he expects results for a clinical trial on monoclonal antibodies in the next few months. That underscores the speed at which the government has been working to quickly approve and roll out a treatment. India has become the third country to record at least 1 million coronavirus cases. The virus curve there didn't flatten, despite imposing an expansive lockdown in March. Only the US and Brazil have had more cases. India's population is more than double those two combined, and that suggests the virus has more room to run. Former Trump communications chief Anthony Scaramucci wants to see the president humiliated in November. The founder of Skybridge Capital says President Trump is, quote, obviously incompetent. He's now seeking Republican votes for Joe Biden. Scaramucci lasted only 11 days in the communications job before he was fired. The president called him a highly unstable nut job. It's one of the largest auction processes this year. Bloomberg's learned that the Dutch internet service company Proces has come up with the highest offer for eBay's classifieds unit. No word on how much the bid is. eBay's classified business could fetch more than $8 billion. The eBay board meets today to choose a preferred bidder. And two more airlines are saying goodbye to the first. Jumbo Jet British Airways is retiring its fleet of 31 747s immediately. The planes were supposed to stay in service till 2024. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
is still lots of need for support to get the economy through this and to minimize the structural damage and the frictions that can result if this just drags on and we don't get some clarity on the virus.
Julia Coronado there of Macro Policy Perspectives on the next step for the global economy if we don't get control of this virus. From New York City this morning, good morning to you all. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Around about 1 hour and let's call it 42 minutes away from the opening bell in New York. Equity futures are firmer, up 11, 12 points to the S&P 500. We advanced by 1/3 of 1%. Think of this, though, as a bounce back from yesterday evening after Netflix slapped around equity futures after that disappointment guide that we got from that company. That means this is not a clean read of how we might open up a little bit later this morning. In foreign exchange, euro dollar 114.21. Huge weekend for Europe. Euro stronger going into that, up 1/3 of 1% for the single currency against the US dollar. And just to put a bow on it, Tom Keene, yields in 2 basis points. That tight trading range on a 10-year treasury over the last couple of months, we stick at around 60 basis points on a 10-year.
Just giving away on the 2-10 spread, John. I'm watching every tick of that today. You have yield compression, folks. There's no question about that. Right now, an important conversation on banking. You can do that with the Lieutenant Governor of the Empire State. We have been thrilled that Kathy Hochul has joined us too often here through this pandemic. I know John and Lisa, Lieutenant Governor, have some important questions on the pandemic. I'm going to go to the heritage of your Buffalo banking, and that is the late Mr. Wilmers in M&T Bank, which was arguably the most community-centric bank in the history of American banking. Robert Wilmers was legendary. We now have a pandemic where there's no question, and even Mr. Gorman yesterday classily mentioned it to John Farrow, the benefits of the fiscal support are going to the big banks of your New York City. Is that fair, and how do politicians adjust it so more gains go to society?
Well, I'm glad you mentioned someone that was a dear friend of mine. I had the opportunity to work with, Bob Wilmers, and I'll tell you what I learned from working with him is that the people who are conservative in their approach to any crisis, whether it's a financial crisis or a pandemic, are the ones who come out as the winners. And that's exactly the strategy that we used here in New York State in terms of managing a pandemic, what Governor Cuomo and our administration have done from the very beginning. But we also know that in order to have money lended into the communities, the small businesses, and places like an M&T did support, one of the largest small business lenders in the state, we need to make sure that the institutions are strong enough to support them. But in terms of bailouts, no. The bailout money should be going to the mom and pop businesses, the restaurants, the bar owners that are struggling, and my focus would certainly be on making sure that the Main Street businesses or the manufacturers that I've been visiting throughout upstate New York to make sure they stay alive, that's where the money belongs, and the financial institutions have received a lot of assistance from the federal government, certainly during the last recession, and now it's time to assist the smaller businesses.
I want to know, Lieutenant Governor, the next go-around as we go out to a reported $4 trillion deficit in Washington, what you need from Morgan Stanley, what you need from Goldman Sachs, and indeed what you need from Mr. Diamond's J.P. Morgan. They're getting major gains here, no question about that. How do we legislate them to get their fair share, but more for Main Street?
They need to lend the money to Main Street, and if they want to get any government assistance, and I'm not in Washington anymore, I'm a former member of Congress, but I certainly would be restructuring it so that we take care of the little guy for once. The little guy got passed over the last time we had a major bailout. We know how that rodeo played out, or that show played out, and it was not good for the small businesses. So those larger institutions, the ones that are continuing to thrive through this, they need to be held responsible. If you're going to take any government assistance, you better be making sure that you're keeping our smaller businesses alive, the backbone of our economy. The largest employers collectively are the small businesses. I come out of a small business background. I've helped start small businesses, and I know that we don't regain our economy, we don't gain our footing nationally or internationally without supporting them. And that's what I would put those strings attached to any assistance that goes to financial institutions.
Lieutenant Governor, also key to getting small businesses back up and running, as well as all business in general, is having kids go back to school and have the parents be able to go back to work in some sort of meaningful way. Governor Cuomo has come out and said he doesn't want to use kids as guinea pigs. What is the science that you're looking at to determine whether or not schools in this state can open?
Well, that is an excellent question, something that has been traumatizing for parents to consider, what happens in just a few weeks when the normal school year would start. And we are equally stressed out about this, making sure that we get it right. We have one chance to get this right. And we will take a more conservative approach. You don't take a prayer and a wing and a prayer approach when it comes to the health of your children. You have to make sure that you feel confident. And what we're looking at, what the scientists and the doctors tell us, we can continue to make sure there's social distancing within the educational setting. And that may say that your gymnasium and your cafeteria and your library are now classrooms, so we can have the children apart from each other, but also wearing masks. And if you have young kids, please, parents, start acclimating the children to the idea that a mask is a natural experience. Like, wear it all day long when you're home, whatever you're doing this summer. Get the kids used to it so the teachers don't have to struggle with this, because that's how we can keep our kids safe.
Yeah.
And
well,
New York
hold on
City
a second.
is particularly
Lieutenant Governor,
complicated.
I'm sorry, but as a parent, I have a very hard time imagining that at home I'm going to have my children wear masks.
You mean it won't become a natural experience?
In order to get used to it ahead of school. I do want to say, though, it's not just kids in school, it's getting to school. What's the science behind getting everyone back into public transportation?
Yeah, and that's going to be the complication, too. And certainly this is a big stressor for families in New York City particularly. And, we know that there's some situations where, just walking to school is going to be safer, whether it's also, can you do something with neighbors and family to, work collectively to get the kids there together in a different way? Is there just another option to not have them on a bus with a lot of other children? I think that's important. That's what we're trying to figure out. The city of New York is working diligently to make sure we get that piece of it right as well. I get this. This is when you think about the pandemic and what this has done to people's psyche and your stress levels. When it comes to our kids, it's off the charts.
Yeah,
and there is a lot of concern. But our infection rate is still low in New York City, and we continue to keep those numbers where they are. We're going to feel more confident. We see a spike start going up.
Right.
We're not going to feel confident, and we'll shut it down.
Lieutenant Governor, very quickly, we're out of time. Luke from Toronto emails in and goes, "How's Jack Eichel? Is he okay? The pride of Buffalo? He doesn't have COVID, right?"
We're doing well with Jack. It's been a fascinating time for our Buffalo Sabres, and we always struggle, but we're gutsy in Buffalo. We got the Bills, the Sabres. We love our teams, and our favorite thing is always next year.
He's fun to watch. Thank you, Governor.
Kathy,
Lieutenant
thank you. Kathy Hochul there, New York, Lieutenant Governor. Up against the clock here, Tom Keane. A little bit naughty, squeezing that in at the end.
John,
I'll tell you the most
Buffalo
unnatural
Sabres,
thing in the
ice
world.
hockey.
Let me get this out
Ice
there.
hockey,
The
John.
most unnatural thing in the world. All 7 feet of Tom Keane walking around the office in a mask.
100%.
I just still can't adjust to the vision.
Ritika Gupta said I had it on
later,
reversed yesterday.
I'm going to put out an exclusive photo on Twitter so people can just get a feel for what that experience is really like on a daily basis. From New York City this morning, good morning. This is Bloomberg Surveillance.
Sometimes you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
In an environment where unemployment is going up, and for those that are in work, there will be that fear of the specter of unemployment coming down the tracks.
These companies are now starting to hunker down for a longer, more protracted recovery. So they have to right-size their businesses.
A lot of businesses are not buying into the V. They see a different destination regardless of the journey.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. An eventful Friday, to say the least. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. We welcome all of you on Bloomberg Radio, Bloomberg Television, across this nation, around the world, particularly those of you from continental Europe. Lots to do in this hour. On the markets, yields come in, futures up 15. But John Farrow, right now, Lisa and I need a primer on how this is not another exercise in kicking the can down the road this weekend in Europe.
It's got to get done. We've got to see some progress, Tom. There's a pool of money. I do, and everybody else does as well. There's a pool of money. What will be grants? What will be loans? And what are the strings attached? That is it. What do we wake up to Monday morning on the front pages of the business papers across the whole of Europe? Is it Europe divided or Europe united? Will we actually finally get some progress? They've got to stop messing around, Tom. The dysfunction in Europe has been a joke for the last 10 years. It's really not funny anymore. Get something done.
How do you think, Mr. Farrow, that this will redound back to our American viewers and listeners? They're like, so what? We've seen this a million times. Everybody's going to take the month of August off in Europe. That's a stereotype. Why does this matter for Americans?
Because if Europe doesn't get a hold of it this time, Tom, it'll be another 10 years of crawling out of an economic hole in a suboptimal way. We'll have crisis after crisis, political episode after political episode, and redenomination risk. When that starts to appear again, it dominates global markets. Tom, we do not want to see a repeat of that. I don't think anybody wants to see a repeat of that. We need some progress on the continent.
Lisa, part of this is my reading this weekend, and I am behind on IG versus high yield. We've got a massive debt buildup, Lisa Abramowitz, in this nation, and what we see more than anything is new debt coming on. How fragile is high yield?
Well, there is a concern that the likes of Carnival and Norwegian cruise liners are the ones that are coming out and trying to raise more money at a time when their whole industry has been thrown into existential angst. Look, there's been more interest in high yield at a time of this faith in the underlying backdrop of fiscal support globally. But to John's point, the idea that all of these very real risks, whether it's the European Union not coming together on a fiscal support, whether it's increase in tensions between the U.S. and China and Europe, whether it's the increase in virus counts that is slowing growth, these are some of the big issues that fly in the face of some of the results that we've gotten out of riskier debt.
All I know, folks, it's real simple here. She can say existential angst and get away with it. If John and I say that, we get a 3-page memo from Al from New Jersey.
Really?
We welcome all of you this morning. What we're going to do is get right to it right now with a brief to get you ready for the weekend and, frankly, to stagger to Q3. We can do that with Brian Levitt, who really filters in all sorts of thinking as global market strategist for the large platform of Invesco. Brian, an open question to begin. What are you writing on into the end of July?
Well, I think the biggest question that I keep being asked is about the shape of the recovery. And I think that there's so much concern about whether it's V-shaped, whether it's W-shaped, and whether it's U-shaped. And, the reality is I think it's going to be a prolonged, protracted recovery, intermittent with fits and starts. But if you go back and you look historically at different recoveries, I mean, you can look at the one from the early 2000s, more V-shaped, early 1980s, more W-shaped, 2008, 2009, more U-shaped. The reality is markets actually did quite well, actually did best in that U-shape. So, I'm expecting some volatility in the near term, fits and starts, concerns about reopening, but a protracted U-shaped recovery can actually be just fine for the equity market.
John, it's hard to believe I made a mistake in the data check that I did up top. I really need to point out, John, that futures with a churning here that we've seen has brought a VIX down to 27.08. That's not normal. That's a real change, John.
Volatility, though, Tom, has remained elevated through all of this and hasn't corrected lower in a material way for quite a while. And Brian's point is basically that an anemic recovery could be sufficient. For an economic recovery to be shallow, it does not mean that this market can't rebound quickly. Brian, is that the point you're trying to make here?
Yeah, that's the point I'm trying to make. I mean, we learned that coming out of the financial crisis. Investors largely bemoaned the weak recovery for a number of years, waiting for things to start to look good, waiting for jobless claims to get back to average, all of these different things. By the time all of that happened, the markets had already staged a pretty sizable advance. So, I think it's, obviously we're all monitoring mobility. We're all monitoring reopening. I think if those things turn, you will have volatility in markets. We should expect uncertainty to lead to volatility. My point is, if you're a longer-term investor, focus more on whether things are getting better or worse rather than whether they're good or bad. Even if they're getting better modestly, slowly, markets should do well. And remember, it's going to be a very long time until we get back to full employment, a very long time until there's some pickup in inflation expectations, which means policy is likely to be accommodative well into the future.
Well, Brian, let's take a 5-year time horizon, shall we? We have had people lining up to get overweight Europe versus the United States. Is that the right idea?
Yeah, I mean, the interesting thing about the non-U.S. markets is it looks like we may be, for the first time in a while, in an environment where the dollar is stable or dare we even say weaker. The aftermath of the financial crisis was strong dollar. The U.S. emerged from it in a better position, and it looked as if the Federal Reserve did ultimately raise rates before the rest of the world did. Now you're in an environment where the U.S. is struggling to come out of it. The dollar is under some pressure as policy becomes very accommodative, and that's likely to persist. So what that enables you to do as a U.S.-denominated investor, as a U.S.-domiciled investor, is to start to look to other parts of the world where valuations are more attractive. I would say, though, within all of that, when you're looking international, I would still favor the more growthier parts of the market rather than looking for, the more economically sensitive parts of the market that'll require a pretty significant acceleration in economic activity in Europe. I would instead say who are the growers, who are the companies that are on the cutting edge of structural changes in society. Those are the types of names I'd be allocating to outside of the United States.
Brian, this is such an important point, this idea of going to Europe over the U.S., and that's currently been what a lot of investors have been saying, which is why the euro is the strongest versus the dollar since early March. And yet we have this meeting heading into tomorrow in Brussels that looks somewhat tenuous in terms of them actually getting a deal done. What is the downside risk, not only to the euro, but just the entire European risk market, should they fail to come to some sort of accord?
Yeah, it's a great point. And, in any nascent recovery, if you don't get the policy mix right, then, that nascent recovery is not going to persist for too long. So much like in the United States, how we have to get the policy mix right, not only monetary, fiscal, and reopening, the same can be said for Europe. And, perhaps a silver lining in all of this, if we can even find silver lining, is that this may lead us to more Europe rather than less. And that's what we've all largely been clamoring for some time, the Hamiltonian moment, the United States of Europe, the joint borrowing, the closer fiscal union. That could be a silver lining in this. To your point, if Europe doesn't get the policy mix right, then, it's likely that we'll see a number of years that looked like, unfortunately, what we saw in the aftermath of 2008. We're hopeful and we'll be watching closely.
The unicorns, the rainbows, the lollipops, we all want it to happen, Brian. I'm conditioned by the last 10 years to be skeptical about it. Why is it going to change? I've been so disappointed by policymakers in Europe. And I want to re-emphasize something I said a little bit earlier. This is not a political point. It's not about political bias. This is a point about politics. The politicians on the continent, regardless of whether they are on the left or the right, Brian, they have disappointed again and again in Europe. We've seen it on the far left in Europe, seen it on the far right in Europe. Disappointment after disappointment. When does it change?
Yeah, we have seen disappointment. Obviously less so from the European Central Bank, but more so from the elected officials. And, perhaps, Jonathan, desperate times call for desperate measures. We will find out. Let's wait and see what the days bring us. But I believe that, what we've seen is incremental steps. It's been a very gradual move towards, more Europe rather than less. I think, if we go back to 2011, 2012, during the European debt crisis, concerns that, the union was breaking up, concerns that they're going to move away from the common currency, and yet here we are. And so we do things incrementally around the world politically, and let's hope that directionally those incremental steps continue to be favorable. And again, my point is maybe this becomes something of a silver lining out of all of this.
Hopefully. Brian, great to catch up with you, sir. My best to the team over at Invesco. Brian Levitt there of Invesco. Tom Keene, could this be the moment that finally unlocks some sustained dollar weakness and unlocks a euro that gets back through 120?
The technicals aren't so great. John, we had a dash there, DXY, on a 95 handle earlier this week. David Bloom is coming up from HSBC at some point this morning. You got to really listen to David Bloom to get an FX update this morning.
The theme from HSBC for the last few weeks, the theme of dollar resilience, Lisa. Dollar resilience, pushing back against these cyclical, structural, political arguments for a weaker dollar and talking up dollar resilience.
I love that I really always question where you stand on European leaders getting together with some sort of fiscal support. And I always wonder what Tom thinks about the dollar weakening story.
I'm not trying to keep it a secret. I think everyone knows where I stand on politicians worldwide.
100%. I will say the idea, though, of dollar weakness predicated on a stronger euro goes to the Dan Alpert point, which is how much does a strong euro torpedo potential growth, potential exports from the euro region, which I think is a very real concern, John. At what point does this become a liability for the region that up until now has been viewed as a sign of strength?
I would take the enthusiasm for a European recovery pushing a euro higher over a weaker euro to try and fuel exports with a Europe on its back and everyone pessimistic about it. I think we'd rather see a stronger euro and real reasons for optimism on an economic recovery and some fiscal integration for the foreseeable future. I'd take that over everything else, and I'm sure many people would too. Up next on this program, Wolfgang Munchau, Euro Intelligence Director, will be joining us from New York alongside Tom Keene and Lisa Bramett. I'm Jonathan Ferro. Equity futures pushing higher. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. Across the U.S., public officials are warning that could impose lockdowns again if people don't act to halt the resurgent coronavirus. The mayors of Miami, Houston, and Los Angeles have all floated the prospect. Soft persuasion isn't working to stop the record number of infections and deaths. Case numbers are climbing in all but 6 states. The White House is drawing a line in the sand for the next coronavirus aid bill. Officials say President Trump could reject a measure passed by Congress if it doesn't include a payroll tax cut. Democrats are solidly opposed, and even Republicans are cool to the idea. In the UK, Prime Minister Boris Johnson is bracing for a second wave of coronavirus cases. He will announce more than $3.8 billion of extra funding to help prepare the National Health Service. Johnson is also due to unveil plans today to ramp up virus testing to 500,000 a day by the end of October. German Chancellor Angela Merkel is raising doubts about reaching agreement on a landmark $855 billion recovery fund this week. In Brussels, EU leaders are meeting in person for the first time in 5 months Merkel says the differences remain very, very great amongst them, how the money will be distributed, and the rules dictating how funds will be green-lighted. In China, people's reluctance to travel and eat out is dragging on the economy. According to a supplemental report on second quarter GDP, the accommodation and catering industry shrank 18% from a year ago. Some areas in China still have pandemic restrictions in place, plus tourism has shrunk as people avoid public places. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The stakes couldn't be higher. If we do it right, we can overcome this crisis stronger and emerge stronger from the crisis. All the necessary pieces are on the table and a solution is possible.
Ursula von der Leyen there, European Commission President, ahead of this summit. It begins today, it concludes tomorrow. Will we finally see some progress on the continent? From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro, counting you down to the opening bell, 1 hour and 12 minutes away, with equity futures shaping up as follows here in New York City. Think of this as the bounce back from the sell-off yesterday evening off the back of those Netflix numbers. We bounced back 0.6% on S&P 500 futures. In the FX market, there's your stronger euro, Tom. Euro dollar 114.28, up 0.4% going into an important weekend for the Europeans.
Just looked at the technical constructions of the euro, John. I'm going to say, you know, it's not like a trend. It's not a breakout or that, but certainly at the high end of a sloppy range that we have seen. We never agree. Lisa agrees with me maybe once every 3 weeks. Pharaoh and I haven't agreed since Christmas. We all agreed we've got to talk to Wolfgang Munchow of Euro Intelligence with not only his expertise on Europe and what it means for our political economics, but just as importantly, Wolfgang Munchow's definitive knowledge of Germany. John?
It was Christmas 2015, just to clarify, Tom.
Thank you.
Goes back a lot further than some people believe, and there was a lot of drink involved too. Wolfgang Munchow joins us now. He, of course, is from Euro Intelligence, the director there. Wolfgang, fantastic to catch up with you, sir. There has been a shift in Europe, Wolfgang. Talk to us about Chancellor Merkel's shift in the last 10 years, the difference in this crisis compared to the previous crisis, and what's driving it?
The difference is that in the previous crisis, she refused point blank to even discuss the possibility of joint borrowing and a joint fiscal effort. That was the case in 2012, and that is the decision that then prompted Mario Draghi to act in as forcefully the way he did. And this was at the time Germany was not prepared for that discussion. Her party was not prepared, her country was not prepared for that discussion. And also in Germany, the Germans had framed the euro crisis as pretty much a fiscal crisis, a crisis of irresponsibility. I disagreed with that framing, but it was very much the way it was talked about in Germany. The Greeks, the Italians, everyone were living beyond their means. And in that situation, it was impossible to act jointly. What is different now were the television pictures coming from Bergamo during the coronavirus crisis. The Germans felt really sorry for Italians, and there was a great groundswell of sympathy for what happened and for the need to show solidarity. So Merkel sensed that shift in public mood quickly and decided that this is a good moment for a joint effort. Now, one has to be very clear, this is not Germany shifting on euro bonds and fiscal federalism or any of these things. This is a one-off. Merkel wanted a big one-off gesture, which is why she and Emmanuel Macron, President of France, agreed this 500 billion proposal of a one-time fiscal stimulus to be stretched over a number of years. And this is what they're discussing in Brussels today.
There is a belief, Wolfgang, though, that this sets a precedent, that this becomes a mechanism to do the same thing over and over again. Are you saying that won't be the case?
Absolutely, that won't be the case. The whole legal basis for this thing is that it is a one-off. One of the big misunderstandings in the debate is that people regard this as the beginning of a wider process. It may do that. That may well, but that it will have yet to happen. Legally, this is a one-off. They can't do this again. So what will need to happen for this to become the first step in a multi-stage process would be for the member states of the EU to change their treaties to say the Eurobond is now part of what we are doing. The joint fiscal action is part of what we're doing. And I see absolutely zero chance of that happening. The Dutch will certainly not agree to that. And I'm not even sure that the Germans, even Merkel at this stage, would not agree to that. What happens now in Brussels is a one-off, and this should be seen as a one-off. And it would be very, I think, reckless to think that this is sort of the beginning of the end of the Eurozone, the Eurozone crisis, that we have kind of nailed it. We haven't nailed it.
Wolfgang Munchow, I want you to talk about the generational shift in the leadership that we will see this weekend. We remember the old horses of this development, Robert Schuman and the others who came out of World War II under exceptionally difficult circumstances and made this European Union. Is it a generational shift this weekend in Brussels?
I think it is a generational shift. This may well be one of Angela Merkel's last big appearances in Europe, and her term is still, she still has another year to go. But the new generation, the new senior guy in the room, that's clearly Mark Rutte, the Prime Minister of the Netherlands. There are the Austrian Chancellor Sebastian Kurz. There is a generation of younger prime ministers who are, I think you mentioned Schuman, and this generation is very different. This generation was marked by the Second World War. They had in common a desire to build Europe. This generation was born into this Europe, and their desire is to carve out the most for their own countries. It's a very different mindset that has governed the council, and the council is an incredible deal-making machine.
Yeah.
They usually come together, but they're not. The spirit of the 1950s is clearly not there.
Real quick here, Wolfgang, I'm wondering, Mark Rutte has really come out as the leader of the Frugal Four. Does he have a point with his arguments against the scope of the 750 billion euro plan?
I think he has a number of good arguments and lots of bad arguments. The good argument is that it is absolutely wrong to pre-assign country allocations. So basically say Italy needs to get 80, Spain needs to get 80. And what happened, the Commission, gave that list of the countries, on what countries get, and then they retrofitted the various criteria so that this was the outcome. And Rutte said this is a ridiculous way of proceeding. This is a backward-looking indicators. You basically, if you want to look at the effects of the crisis, we don't know the effects of the crisis, so you have to take current data. And current data may suggest that Belgium should get a bigger share because Belgium is actually suffering from the crisis quite as bad as some of the other countries are. So that's a good point, and one that I happen to agree with. What I don't agree with, of course, is the sort of general rejection of any kind of European solidarity, that everything has to be a loan, which is this position that countries need to reform as a quid pro quo to get the money. Now, I think they should reform. To link this to the money, I think, is a mistake. So there are lots of unreasonable aspects of it, but the way the package is designed, it has made it open to valid criticism. The package is trying to do too much with too little money. It's trying to be a fiscal transfer. It's trying to be an investment program, and it's kind of trying to solve Italy's solvency issues, all with one package, and it will not achieve that. This is 500 billion or 750 billion, however it may be, however much it may be. You're not going to solve all of that with that one package.
Wolfgang, always appreciate your time. Stay close. We've got to get you back soon to follow up on this going into the weekend. Wolfgang Munchau there of Euro Intelligence. Coming up next on this program, Michael Dada, MKM Chief Economist and Strategist from New York City this morning. Good morning to you all. This is Bloomberg.
Greatest fear is if we continue with a system that allows pharmaceutical companies all the monopoly control over the medical solutions to this pandemic, that we're going to see a situation of a bidding war, essentially, between rich countries.
I I can't block the U.S. from doing deals. Of course, I would imagine many allies would be quite unhappy at the time if they're dying, their populations are infected, and that's not being shared. So what we can do is create legal agreements with companies and try to move forward. If at the end of the day, those legal agreements are broken or countries seize assets or don't allow provision of vaccines, that's a problem.
We'll have to find a solution because some of these arrangements have been made. And I think we have to be pragmatic about it. I think we also have to stick to our guns.
We do need aggressive intervention, so I am supportive of government acting in an era of a crisis, but I think we should make no bones about it, that these types of interventions are not dealing ultimately with the pandemic.
2% inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that. Like all developed economies, I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
$60 minutes away from the opening bell, recovering from yesterday evening's losses. Equity futures this morning up 21. We advanced 0.6% this Friday. From New York City this morning, good morning to you all. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Your euro advancing around about 1/3%. Euro dollar 114.24. Going into an important weekend on the continent. Here in the United States, the fiscal discussion will continue. The bond market wide open for this administration to continue acting counter-cyclically. Your yield on a 10-year maturity, Tom, 0.6% and down a single basis point on the day.
Where we are, the yields are extraordinary, and of course, screams of financial repression, to steal a phrase from William Gross. Joining us right now, Michael Darda of MCAM Partners, who takes first-order economics and folds it into market strategy. Michael, I want to go back to Greg Mankiw in the financial crisis, spotting ISLM theory and the effect of massive government debts on basic algebraic functions we all take as gospel. Are we about ready to blow up our economic theories because of a $4 trillion deficit?
I don't think so, Tom. You know, we've been talking about ISLM modeling over the course of the last few months, and it was actually quite helpful in thinking about the liquidity shock that hit with the early phase of the pandemic back in the dark days of March. And we could see that in the TIPS inflation break-even market. So there was that very scary period where real rates shot up and inflation expectations crashed. And now with the Fed's extraordinary actions, that's really fully reversed. And the fiscal deficits are not putting any upward pressure on rates. And, large part of that is because we've had a, big crash in the economy. We are coming back faster than anticipated over the last few months, but there's still ground to make up, especially on the labor market. And, there are still lingering risks out there. So the rate structure is low, no crowding out.
You're one of the great nominal voices of this racket. We've got negative real rates, and folks, yes, we've seen the many requests this week for the return of the real yield. It's under intense discussion here at 731 Lexington. Forget about the real yield, Michael Darda. The nominal yield is not survivable for too much of society. That's not a concern to you?
Well, it is a concern, Tom, but the question is, is this simply the result of very low neutral interest rates, right? So you mentioned the real rate being negative on the 10-year TIP security. Inflation expectations are positive, and they are rising. I take that as a positive, but they're not that high, 140 basis points out to 10 years. So we have an environment of very low neutral interest rates. So financial repression really isn't the right term for this, in my opinion. There was a period in the 1940s where the Fed was pegging short and long-term interest rates, and you had galloping nominal GDP and inflation, even with price controls because of the World War II spending. That's financial repression. When rates are low because there's been a slump and there are still lingering risks, that's not financial repression. That's just a low neutral interest rate. So it seems like I'm splitting hairs, but there's a massive intellectual fail on this point.
Michael, this is really, really important. In Europe and Japan, they weren't able to engineer a recovery that led to higher interest rates. The tolerance for higher rates reduced. And when you pile more debt onto the economy, perhaps arguably it comes even lower. Are you thinking about that dynamic, Michael?
Well, I think, this is a sad situation. I don't think there was really a choice on the fiscal side but to move in a really aggressive and perhaps open-ended fashion. Where the U.S., I think, made a mistake was in running up deficits in the last 2 years of the cycle when the labor market was quite healthy. And that was due to simply the lack of agreement on how to restrain spending and fit in some of the other policy initiatives that the administration wanted to do. And so, my reading of Keynesian economics is that you run deficits during bad times or the slump, not during a boom or during a tight labor market period. So that was unfortunate. Hit with the pandemic, there's an emergency here. And so I think trying to do austerity at a time like this doesn't make much sense and probably is self-defeating. But once the economy is closer to fully recovered, it'll make a lot more sense to be pulling back on the fiscal side, where the Fed, because of higher neutral interest rates, hopefully at some point, if we recover enough, will get more traction and they'll be able to offset those fiscal headwinds.
What's your point, Mike?
But that's down the road.
The neutral rate is not a static point. It does move around a bit, but looking at the long dot right now at the Fed, it's still in and around 250. They haven't brought that down. And Mike, I just wonder how low you think that should be.
Yeah, it's a moving target, and it's estimated. The neutral rate is not observable, but I think the best we can do is to watch some of these credit market indicators, and the TIPS inflation break-even market that I mentioned before has been very helpful in this regard. So I do think the Fed is getting traction here with QE and with some of the liquidity and credit programs, the 9 of them that they have out, and you can just see that in this gentle but ongoing recovery in inflation expectations. They're still lower than before the shock hit, but they are recovering from 55 basis points at the lows of the year to 140 basis points, and so that's good. We're going in the right direction there.
Michael, a lot of people have been looking at the low interest rates and justifying purchases of riskier assets by virtue of the fact that there is no yield elsewhere. You have been out in the forefront of this, saying that stocks look like a good buy. You are right. Kudos to you on that. But what about now as virus counts increase, with the virus very much being in tandem with the economy? The more the virus expands, the less the economy can recover.
Right. Thank you for that, and thanks for the question. It's a good one. So the bar is higher now, right? We've moved 40% or so off the lows, so this has been a startling rally, even, surprised me. And the question is, okay, if the stock market is pricing in a recovery, we know that's happening. The last 2 months, the recovery was sooner and much more forceful than widely anticipated. But what happens from here, especially with these hot spots blowing up? Florida and Texas together are almost 15% of the U.S. economy, and California is another 15%. And, these are areas that are now backtracking on some of the reopenings, and so that is a threat, and that's the big question. So the bar is higher for the equity market for sure. But, based on my interactions, this is more or less anecdotal, most professional money managers, I think, have been pretty skeptical of this whole move up, and there's still quite a bit of skepticism out there. So as long as that is the case, then, you might have support for equity markets at current levels or even somewhat higher. But an economic recovery with still low discount rates is, pretty powerful fuel. That doesn't mean we're going up another 40% over the next few months, but I think we'll hold most of these gains.
Michael, that skepticism has been expressed by hiding out in big tech, in Amazon, Apple, and Netflix, with people expecting more from Netflix than they delivered. Netflix shares plunging after reporting earnings yesterday. How much does that indicate a broader over-enthusiasm, overvaluation of big tech and sort of some of the gains that they brought forward from the initial pandemic versus just a one-off on Netflix?
Yeah, it's another really good question. So, these leading companies that are really leading innovation, they're going to have very high valuations in an environment where you have growth, where growth is positive, but discount rates and inflation are quite low. But the issue, as you noted, is that if you're trading at a huge price-to-sales multiple, if you start to disappoint in any way, or if the economic cycle turns down, there can be an enormous plunge. So, what goes up can come back down equally as forcefully. A key question going forward is some of the rotation we've started to see going to have legs? So energy, for example, absolutely obliterated this year, but has done phenomenally well from the lows of the year. That's one value sector that can continue to recover in our view, and there are certainly some others. So if we see more legs in this rotation into some of the value and traditional value and cyclical names, then the market can continue to power higher from here.
Michael Darter, we see a mortgage rate under 3%. What's your actuarial assumption? What is the expected return of some form of retirement or pension portfolio?
Well, Tom, I think they're going to, it's going to be certainly lower as a consequence. I mean, we mentioned the market going up 40% over the last few months. So so when you move up like that, then the anticipated returns should be lower, and those low discount rates are telling you, lower returns over an extended period of time. So that's, certainly created some problems for pension shortfalls, but we're gonna be in a relatively low return world, even though we've bounced pretty dramatically from the lows on risk assets of the year.
Mike, great to hear from you, sir. Send my best to the family. Send our best to the family, won't you? Mike Darter there of MKM. Tom, Mike mentioning the underperformance of, say, energy over the year and the rebound we've seen in the cyclical parts of this market. Yeah. This week, really interesting. Our colleague Sarah Ponzek putting out this stat in the last 24 hours. NASDAQ 100 down 2.7% this week. S&P 500 up 0.6% this week. That puts this week on track to be the worst relative week for the NASDAQ since May 2009. Tom, huge outperformance, tech underperforming through this week.
Well, we've seen it before, and then it drifts away. I'm not sure what the staying power of this is, but on a deviation basis, those ratios, however you look at it, John, are way, way out of kilter. I mean, the run here that we've seen on the NASDAQ 100 is almost not mathematically chartable.
Lisa, just getting a terminal subscriber running in, that the equity market doesn't make sense here, that it's like a sparkly green bow tie.
Oh, you got my email.
On a nice suit.
Bow tie.
A sparkly green one
who's that
on a
referring
nice
to?
suit.
Well,
that maybe there's some parallels there. Just feels uncomfortable.
I walked by Lily on Madison Avenue yesterday, and I said, I got to be fun today.
Did they feel sorry for you or you for them?
No, they weren't open. I just, fun,
Do you have a sparkly green bow tie,
No,
Tom?
it's Lily.
That is it now.
It's
is it sparkling?
This is working well on radio, guys.
We're going to put the picture out for the listeners on radio. Coming up on this program, Mike Mayo, Wells Fargo Securities Senior Bank Analyst. That was a nice out, Tom, from New York City. Heard on Bloomberg Radio.
Time to go home.
Seen on Bloomberg TV. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Anthony Fauci is optimistic there could be a new treatment for the coronavirus by fall. The infectious diseases chief spoke to Facebook CEO Mark Zuckerberg in a live event. Fauci says he expects results for a clinical trial on monoclonal antibodies in the next few months. That underscores the speed at which the government has been working to quickly approve and roll out a treatment. India has become the third country to record at least 1 million coronavirus cases. The virus curve there didn't flatten despite imposing an expansive lockdown in March. Only the US and Brazil have had more cases. India's population is more than double those two combined. That suggests the virus has more room to run. Former Trump communications chief Anthony Scaramucci wants to see the president humiliated in November. The founder of Skybridge Capital says President Trump is, quote, obviously incompetent. He's now seeking Republican votes for Joe Biden. Scaramucci lasted only 11 days in the communications job before he was fired. The president called him a highly unstable nut job. And it's one of the largest auction processes this year. Bloomberg's learned that the Dutch internet service company Prosus has come up with the highest offer for eBay's classifieds unit. No word on how much the bid is. eBay's classified business could fetch more than $8 billion. The eBay board meets today to choose a preferred bidder. And two more airlines are saying goodbye to the first jumbo jet. British Airways is retiring its fleet of 31 747s immediately. The planes were supposed to stay in service till 2024, but that was brought forward because of the pandemic in Australia. The last Qantas 747 made a farewell tour over Canberra, Brisbane and Sydney. The 747 entered service in 1970. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
last 30 years, I've managed through a number of crises myself, but nothing I've ever seen has ever been quite like the crisis we have now. I want to talk to CEOs and see how they're living through this crisis. Who is going to really manage their company in a way that people will remember it? That's what I want to know. This is Leadership Live.
Our associates have been dealing with and coping with all of that change, trying to do the best job they can of keeping each other safe and customers safe. And that's what I'm going to remember from this whole experience.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
Does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. So you can keep on.
profitability Wall Street is actually dramatically down. We have a different business model. That's why we performed the way we did this quarter. But I think if you look at the banking sector, the hits that they're taking, consumer credit, small business credit, corporate credit, the bankruptcies.
James Goldman there of Morgan Stanley weighing in on the situation on Wall Street and the pain in the economy, not just here in the United States, but worldwide. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. In just a moment, in the next hour, we'll catch up with Jonathan Golliber, Credit Suisse, on this equity market. And Tom Keene, just a little bit of an announcement to make. At 1 p.m. Eastern time, we will have a smaller, condensed Bloomberg Real Yield. It will come back just 10 minutes with Priya Misra of TD Securities. This is just a little project. If it goes well, we'll stretch it out, and maybe over time, we'll bring the whole thing back. So just a little bit of a flavor of Real Yield for the people that have missed out over the last 4 months.
The whole world.
A 10-minute version of it, Tom, Lisa, coming up a little bit later. I think that management's watched you wind me up about this program for the last 4 months, got annoyed with you this week and thought, you know what, we know how to get him back. Bring Real Yield back.
I'm surprised you didn't cram 3 guests into 10 minutes.
I tried. I was told there was technical issues and we can only do the one.
100% believe that.
Priya Misra right now, folks, will be perfect to drive forward this conversation because the dynamics of the bond market are tangible. And those dynamics come right over to a statement on the American economic system and what it means for American banking. Michael Mayo is with Wells Fargo. He's been doing this more than a long time and has always done it with a certain vigor which upsets the executives and is required reading for everyone on the street. Mike Mayo, great to get an update from you. Let me go to the money question. They're lining up the accountant ducks of losses that will be taken down the road. Do you know what those losses will be taken down the road, or do you, like everybody else, have to wait?
Well, these are some of the most uncertain times, Tom, that I've seen in my 3 decades of covering banks. But we do have the results in for the 8 largest banks. And the conclusion is you've seen the twin peaks of pain. The provisions for future loan losses relative to the actual losses these past 2 quarters have been the highest in history. And the second bit of pain is that the decline in the net interest margin these 2 past quarters has been the biggest in history. So there's a double-barrel shotgun, pointed at the banks in terms of credit losses and NIM compression, and that's huge pain. But let me point out, this is not 2008. It's 2020. Banks are now part of the solution, not part of the problem. The war chest for future losses, whatever they will be, is the highest in history at this stage of a recession in the past 50 years. The reserves for the largest banks equal half the level of the actual losses during the global financial crisis. Even with this huge buildup of provisions or reserves for future problems, banks still grew capital, still grew book value for the most part, and still for the most part covered their dividends sometimes by 1, 2, or 3 times. So, and banks are still open for business.
Yeah.
The growth in deposits at Bank America and JP Morgan, wow. I mean, over the past year, they grew equal to the 5th or 6th largest bank. So I give the banks for the second quarter earnings a B+. But when it comes to the outlook, Tom, nobody knows. It's a very uncertain time, so you need to be ready for a variety of scenarios.
I love having you on, Mike, as always. Twin peaks of pain. You have a way with words. Pair the twin peaks of pain with the record revenues, the record income from investment banking and trading volumes. How much does this bring up political risk for the banks at a pretty unseemly time, the idea of profiting at a time of such economic pain?
Well, look, banks are serving customers. And sometimes, like in March, banks were serving customers with record lending as revolvers were getting drawn down. In the second quarter, banks were serving customers by issuing debt to the capital markets, record debt issuance year to date. And it's natural that you have strong trading that follows that. So whether you serve clients with lending or if you serve them with capital markets, you're still serving clients. So I'd say that criticism is more of a 20th century criticism. In the 21st century, financial world, you're serving the customer if you're a large bank.
Looking forward, given the uncertainty, given the likely pain in the consumer that a lot of big bank executives are expecting, which financial firm is best positioned to increase profitability going forward based on these results?
Well, look, you have the twin peaks of pain. The good news is that the reserves for those future losses, have been built more than ever before. These are sobering times. We expect loan losses to increase by about threefold over the next couple years. But the other part of the pain, the net interest margin, should hurt the more plain vanilla banks more than anyone else. So we're going with the largest banks, Citigroup, Bank of America, and JP Morgan, because they are more diversified. They have more levers to pull, and digital banking.
Okay, I'm placing an order to sell short euro at 114.21.2. Let's see if I will be able to sell short at 114.21.2. Apparently not. Move too far. Let's see.
Fantastic underwriting, again, serving clients, trading. The traditional roots of Goldman Sachs really came out. So this quarter showed you that Goldman Sachs is still Goldman Sachs like they've been for over the past 100 years, and not what they want to be in the future.
Michael Mayo, thank you so much. Greatly, greatly appreciate it. With Wells Fargo, as always, must read on the street as well. Lisa, what an extraordinary week. I know John Farrow's been hugely Europe-centric here with these critically important meetings. But Lisa, I got to go back to full faith and credit to see where the bond market is with yields in, and we now have significant VIX compression in the last 24 hours. That is of note.
There's dissonance here, the idea that the lower yields go, the lower also credit spreads go, the idea that the lower yields are pushing investors into risk, even though they typically signal slower growth going forward. This is the conundrum, the fiscal support conundrum facing markets, Tom.
Yeah, I mean, 26.97 on the VIX, folks, is just absolutely extraordinary off of the angst of 32, what seems like 3 days ago or so. Lisa, what are you looking for in your weekend reading?
Well, in my weekend reading, I really want to understand how to view the increase in virus cases, given the fact that that really will determine the economic recovery. I don't see that being reflected in markets to the degree that some strategists are saying. I want to know what they have to say about that.
I've given up, Lisa, on the dynamics of cases. I'm far more interested in this angst of death. And as Michael Darda said there, the dominance of the Florida, Texas, and California economies in this nation. So I'll be watching that closely as well. We need to say thank you to our team for really an extraordinary week, particularly pleased with the people that have given us their medical expertise on this terrible, terrible pandemic. Please stay with us through the week. Again, special coverage at 1 p.m. on Bloomberg Television of The Real Yield.
Downtown Mexico City, where there is quite a lot more movement than before because the downtown is beginning to reopen.
Some businesses are still shut down and others are open, so they're alternating days of the week in which they can open. There are a lot of people wearing masks, almost everyone is. The city also tried implementing a rule that would limit the flow of people to downtown. Mexicans are being very cautious.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
None of us are safe until all of us are safe. We need to have a global approach into handling and fighting COVID-19, a global pandemic. Part of this, of course, finding an effective vaccine.
You can call me Andy. I lead a group of soldiers, fighters like you.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Call me Andy. I lead a group of soldiers, fighters like you, with an extremely rare skill set. What do you mean?
From New York City, for our viewers worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bell. Equity futures bouncing back from yesterday evening's losses. We begin with the big issue, Congress. Returning to work Monday, facing contentious negotiations. The White House signaling to policymakers the president could reject the new aid bill if it doesn't include a payroll tax cut. I quote, President Trump wants to provide relief to hardworking Americans who have been impacted by this virus. And one way of doing that is with a payroll tax holiday. He believes it must be part of a Phase 4 package. House Speaker Nancy Pelosi remaining optimistic.
We can't go home without it. And so because of the unemployment insurance expiring and the rest of that, we have to have the legislation. It's been 2 months. It's been 2 months. More people have died, more people have gone unemployed, and more people have been infected.
Can we get a deal done down in Washington, D.C.? Joining us now, Kevin Cirilli, Bloomberg Chief, Washington correspondent. Kevin, the House Speaker does sound optimistic something can happen here, that the two sides can come together. What's your take?
Well, look, I think that what we've triangulated now 3 different camps in terms of where the White House, Senate Majority Leader Mitch McConnell and Speaker Pelosi are in terms of the red lines that they each have for the next round of stimulus. Speaker Pelosi wants to see additional funds to the states as well as to employees and some more programs to provide financial assistance to the underserved in the country. Leader McConnell wants to ensure that liability protections are encapsulated in the next round of stimulus, particularly to incentivize workers of all different types to get back into work, and that top business leaders wouldn't be held on the legal hook, so to speak, if the virus were to spread in the office. But for President Trump, he is now dug in on this issue of the payroll tax.
Hello and welcome to What's New on Netflix, the weekly...
They're a bit perplexed, Jonathan, because they're not sure where they see the opening. From a political standpoint, this could provide the president an opportunity to draw a contrast with Democrats as he tries to reset his 2020 campaign about tax cuts as a whole.
Kevin, always expected some form of division between the Democrats and the Republicans. Can you walk me through the division within the administration right now on the path forward?
Well, I think that from the likes of Mark Meadows, the president's chief of staff, I think that there's someone who is probably has a bit more of a realist approach to how
the dynamics of the Republican caucus are up on Capitol Hill, especially in the House of Representatives, just given his previous clout in Congress when he was a member of the Freedom Caucus. And I think that the president, when from his economic advisor's perspective, people like Treasury Secretary Mnuchin and others, they're trying to lay the groundwork for the potential of there being another tax type of piece of legislation, either before the election to draw a contrast or in a Trump second term.
Kevin Cerruti down in Washington. Kevin, stay close. Always great to catch up with you, sir. Our chief Washington correspondent. It is July 17th. In around about 2 weeks, the enhanced unemployment benefits will expire. Congress does not get back to work until Monday. Why do we keep doing this? Isaac Boltanski of Compass Point says he remains bullish on the prospects of a $1.5 trillion Phase 4 economic package becoming law by early August, as policymakers come to terms that the reality that reopening is not synonymous with recovery. He joins us on the phone right now. Isaac, your expectations going through the weekend into Monday of what negotiations look like over the next 2 weeks?
Morning, Jonathan. I'm telling my clients that they should be confident that a deal is going to get done. But I'm highlighting that there will almost certainly be potholes and therefore opportunities between here and the bill hitting the president's desk. Jonathan, we know how this movie is going to play out. Over the next week or so, Washington will stumble and the markets will fall out of bed. There'll be an article saying the two sides are far apart, or a tweet from the president saying something to the same effect. Then we'll have to wait about a day or so, maybe, and we'll hear from a senior administration official saying that the two sides are closing in on a deal. And then we'll have a signing ceremony right before the conventions, and everyone can go back to their corners. So I am confident in the end game, and I am cautioning that there will be a pothole between here and there that could present an opportunity if properly positioned.
Isaac, it is almost unthinkable for either party not to agree on another bill, another support package, when both all have to face an election this coming November. But regardless, Isaac, as you point out, there is division. We will see that division come to the surface in the coming weeks. What is the point of division that you think is going to be difficult to really get over in the coming weeks?
I think that's the main overarching principle here. Always bet on politicians doing what is in their own self-interest. And it is in the self-interest of every single incumbent in Washington to get another fiscal package done. In terms of your specific questions of what I'm watching as the telltale signs, I think first and foremost, it's the unemployment insurance. That supplementary $600 per week is a massive sticking point. Ultimately, what I think they're going to do is they're going to look at that extra $600, which is scheduled to sunset at the end of July, and say $600 is too much. But let's agree on something a bit lower, something in the $300 or so per week range, and couple it with an incentive for going back to work in the tax code. And I think that that is where we will end up on unemployment insurance. We also have to watch state and local funding. Doesn't look like the initial Republican offer from the Senate is going to have state and local funding as large as the House wants it, may not have it at all. I'm confident that will ultimately also be in the deal. And that's why, Jonathan, I'm up around 1.5 trillion in my number, because everybody's going to try to hang their ornament on this Christmas tree, knowing it's the last train out of the station.
The administration, Isaac, says that the payroll tax cut is quickly becoming a red line to get this deal done. What's the red line from the Democrats going into these talks?
I think it's state and local funding. Kevin put it perfectly. It's state and local funding. It's also unemployment insurance. To me, that's 1A and 1B. I think that what we've seen is state and local budgets just get decimated by the shutdowns. Some estimates say that the hole that needs to be filled is in the $650 billion range. I've even seen estimates higher than that. So to me, I think that's number one. And number two is this unemployment insurance. Below that, I think there is some agreement around another round of recovery rebates, but they want them to be a tad more targeted than we saw back in the Phase 3 deal.
Isaac, is this it? The last package? No more, that this is the final one ahead of November? Is that how you see things?
So this is the last meaningful fiscal package. We have another deadline, the spending deadline at the end of September, but conventional wisdom is they'll just punt that deadline into the lame duck session. So this is it, Jonathan. And that's part of the reason that I'm so confident that they're going to get it done. This is the last window before the conventions, the last window before the real campaign trail hits. And so that's why I think that they'll ultimately find a way to spend a lot of money.
Isaac, a philosophical question to round things up for you, and certainly not a political view. This is a view on politics more broadly. Why do we govern like this? And not just in the United States, across the world. Why do we govern like this? 2 weeks before something as important as enhanced unemployment benefits expire, and here we are, starting these talks properly this Monday.
The simple answer is our political system is broken. There is no sense of urgency without a deadline. There is an undue amount of political posturing that is intended in part to feel out the positions prior to real negotiating, even though...
The other place to sell short euro at 114.21.3. 114.21.3 short order.
And very frustrating for everyone, particularly the people hardest hit in this economic downturn and this pandemic. Isaac, great to catch up with you, sir, as always, for that much-needed perspective ahead of Monday and the negotiations coming up down in Washington. And coming up on this program, Oksana Aronoff, JP Morgan Asset Management, alternative fixed income strategist, as we head over to Brussels, Europe. Fiscal next steps, important on both sides of the Atlantic, going into the weekend and coming out of it. 22 minutes away from the opening bell, equity futures recovering from yesterday evening's losses. We are positive by 18 points on the S&P, up 0.6%. From New York City this morning, good morning. This is Bloomberg.
Order removed. We removed order.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Likely is it that we see a deal by Sunday?
I would say less than 50%. There are many issues on the table. There's this issue of the reforms. We need reforms, a clear commitment to reforms. Countries who are lagging behind in terms of reforms in pensions, labor market, etc., need to step up the game. It's crucial that we come out of this meeting with an outcome which guarantees that reforms will take place. A weak compromise will not take Europe further. We could still get to a compromise. I mean, it's still possible. Let's be hopeful. You never know.
The buzzword, reforms, reforms, reforms. Dutch Prime Minister Mark Rutte there telling Bloomberg's Maria Tadeo he's not optimistic that European leaders will be able to reach a deal on an $855 billion recovery fund at their weekend summit. Joining us from Brussels, Maria Tadeo. Maria, fantastic to catch up with you going into this weekend. How wide apart are these two groups, the Frugal Four and the rest of Europe?